Giving, done consistently, shape your character and align you with abundance. The act of giving affirms that you have enough, that you live in a world of plenty, that money flows through you and not just to you. This attitude attracts more because you have proven yourself a channel for wealth, not just a container. And here's the deeper truth. Wealth is not possession, but about stewardship. You are not the ultimate owner of your money. You are a steward, entrusted for a time to manage it, grow it, and use it wisely. When you treat money with respect and responsibility, it multiplies. When you abuse it, neglect it, or hoard it, it decays. Stewardship transforms money into a sacred trust, reminding you that how you use it matters as much as how you earn it.
Money, at its core, is not simply paper or coins. It is energy, a representation of trust, exchange, and human effort. Every dollar you hold has passed through
God.
countless hands, from the worker who earned it, to the business that paid it, to the customer who supported that business, and finally, to you. This continuous flow reminds us that money is always moving. It circulates, and like blood in the body, it must keep circulating for health to exist. Those who understand the science of money align themselves with this flow. They do not cling to money out of fear, nor do they waste it carelessly. Instead, they channel it deliberately into investments that grow, into opportunities that multiply, and into causes that create meaning. To them, money is not stagnant storage, but dynamic movement. A key part of this flow is the way you handle income. Most people, when they earn money, follow a simple formula: earn, spend, and save whatever remains. But the wealthy reverse this formula: earn, save, and then spend what remains. This one shift changes everything. By treating savings as the first expense, you guarantee that you are always moving forward. By treating savings as optional, you guarantee that it will rarely happen. This brings us to the principle of paying yourself first. Before you pay the landlord, the utility company, or the grocery store, you must pay yourself. This means setting aside a portion of every dollar you earn, no matter how small. Even if it is only 5 or 10%, the habit is more important than the amount. Over time, this habit builds capital, and capital is the seed of wealth. The wealthy pay themselves first, consistently, relentlessly, and automatically. Along with paying yourself first comes the principle of financial defense. Offense is about earning more. Defense is about protecting what you earn. Many people increase income only to lose it through poor spending, unnecessary debt, or unwise investments. Defense means guarding your wealth against loss. It means avoiding unnecessary debt, resisting impulsive purchases, and protecting against risks with insurance and diversification. It means living below your means so that wealth has room to grow. The science of money teaches us that wealth is not only built by income, but what you keep. A person earning $200,000 but spending $210,000 is poorer than a person earning $50,000 and saving $5,000. Wealth is measured not by income, but by net worth, the assets you own minus the liabilities you owe. By focusing on defense as well as offense, you ensure that your wealth grows steadily, like a fortress built brick by brick. Defense also includes caution with investments. Every opportunity carries risk, and many so-called opportunities are traps. The wealthy study carefully, seek expert advice, and never invest in what they do not understand. They avoid schemes promising quick riches. They know that if something sounds too good to be true, it probably is. They prefer steady, reliable returns to flashy gambles.
Can we stay
They
bullish,
know that
please?
wealth is long term, not short term. They think in decades, not days. Yet, while they are cautious, they are not paralyzed by fear. The science of money requires balance. enough caution to avoid disaster, enough courage to seize opportunity. This balance is achieved through education. The more you know, the less you fear. Knowledge reduces uncertainty, and uncertainty is what magnifies fear. By learning about
Once
markets,
we get to
investments, and
0.5, I'm
business,
going break even.
you equip yourself to make wise decisions with confidence. Education in money is not something you finish, it is something you practice. The wealthy are lifelong
Yeah, 100
students of
points in the
finance.
practice
They
challenge.
read books on investing, study economic trends, follow successful investors, and learn from their mistakes. Each year they grow wiser, and that wisdom compounds just like money does. A single insight can save thousands of dollars or even millions over a lifetime. Ignorance is expensive. Education is profitable. In addition to education, the wealthy apply the principle of multiple streams of income. Relying on a single source of income is like balancing a table on one leg. It is
I have to go
unstable
break
and
even at this
easily
point
shaken.
because we have an hourly
The
fair
wealthy
value gap
build multiple
right here.
legs. Income from
The
work,
price to
from
reverse from.
investments, from real estate, from royalties, from businesses. If
Supposed
one
to go
leg
price to
weakens,
one.
the others keep the table
Keep
standing.
this 100 points in practice
Multiple
challenge.
streams of income create stability, security, and accelerated growth. Think of a river. If one stream dries up, the river shrinks. But if many streams feed it, the river flows strongly. Your financial life is the same. The more streams that feed your wealth, the stronger and more abundant it becomes. Another law in the science of money is the law of control. You must control your finances, or they will control you. This means knowing exactly where your money goes, tracking expenses, and staying aware of your financial picture. Many people drift through life with only a vague
I want
sense
to
of
see
their
prices
finances,
run through
hoping it
this
all works out.
new week
The
gap
wealthy
and
know
close above this
precisely what they
weekly
own, what they owe, what they earn, and what they spend.
and go above
They
that. Then I
live
know
with
we're going to stay
awareness
bullish
and
for today.
control, and that awareness alone creates progress. Control also means avoiding dependence. To depend
This is 5
entirely on one job,
minutes there.
one client, or one source of income is to give away control. If that source disappears,
Price starts
your
flipping, then
financial
I'm going
stability
to trade.
collapses. The wealthy diversify their dependence. They develop skills that make them valuable in many places. They spread investments across many assets, and they avoid putting all their trust in a single point of failure. The law of control extends further. You must control your own emotions, habits, and impulses. Many financial disasters are not caused by lack of knowledge,
So
but by
back to
lack of
the first
control.
5 minutes now.
Impulsive
Put out
spending,
one price to do.
emotional investing, reckless
First is we
borrowing.
have a DR for
Control
now, so we
is
might even
power.
do a deep
When you
retracement.
control yourself, you control your future. Now, let us reflect on the role of vision. Vision is the ability to see beyond today, to imagine a greater future, and to commit to making it real. Wealthy people live with vision. They see themselves not only as they are, but as they could become. They set clear goals, visualize success, and move steadily toward it. Vision keeps them motivated in times of difficulty because they are guided by not present pain, but by future promise. Vision also expands possibilities. When you imagine a greater future, you open your mind to opportunities that others cannot see. You begin to ask different questions, make different decisions, and attract different resources. Vision acts like a magnet, pulling you toward the life you imagine. Without vision, you drift. With vision, you drive. And tied to vision is purpose. Money by itself is not enough to fuel lasting motivation. Purpose is what sustains effort through challenges. When your wealth is linked to a purpose, to care for your family, to achieve freedom, to contribute to society, to live your
No
dream,
way.
you gain an inner drive that never fades. Purpose turns discipline from a burden into a joy. Purpose gives meaning to sacrifice. Purpose transforms money from numbers into a mission. Purpose also protects against misuse of wealth. Without purpose, money can become a trap, leading to indulgence, addiction, or emptiness. With purpose, money becomes a tool, leading to service, joy, and fulfillment. The wealthiest people are not those with the most money, but those with the most meaningful use of money. This is why at the heart of the science of money, there is always service. The more people you serve, the more value you create, and the more wealth flows to you. Service is the ultimate foundation. If you want to be wealthy, ask yourself daily, whose life can I improve? What problem can I solve? What need can I meet? Every dollar in your life is proof that you served someone.
At every stage of wealth creation, discipline and awareness remain the guiding lights. But as your wealth begins to grow, a new challenge emerges: how to sustain it and make it last. Earning money is one skill. Keeping it, multiplying it, and ensuring it endures across generations is another. The science of money shows us that the rules of building wealth are not identical to the rules of sustaining it. Sustaining wealth begins with humility. Many fortunes are lost not through lack of opportunity, but through arrogance. When people believe they are invincible, they stop learning, stop listening, and take reckless risks. The wealthy who endure are those who remain humble, remembering that the same laws that built their wealth also govern its continuation. They respect the rules, guard against complacency, and continue the habits that brought them success in the first place. One of the most important sustaining habits is diversification. Just as a farmer plants many crops to guard against drought or disease, so must you plant wealth in many forms. Stocks, bonds, real estate, businesses, and even intellectual property all provide different protections and opportunities. If one declines, others may rise. Diversification spreads risk and increases stability. The wealthy never bet everything on one outcome. They build portfolios designed to withstand storms and thrive in sunshine. Another sustaining principle is simplicity. While diversification protects, overcomplication destroys. Many investors chase complex strategies they do not understand, lured by the promise of extraordinary returns. But wealth is most often sustained through simple, steady strategies: consistent saving, wise investing, long-term holding. The wealthiest families often follow straightforward principles for generations, avoiding speculation and complexity. Complexity creates confusion, and confusion leads to mistakes. Simplicity brings clarity, and clarity leads to endurance. This endurance also depends on teaching.
Come on.
Money that is not accompanied by wisdom vanishes quickly. Studies show that inherited wealth often disappears within 2 or 3 generations. Why? Because while money is passed down, the mindset, habits, and values that created it are not. The science of money insists that wealth is not only financial, but educational. You must teach your children and grandchildren the principles of earning, saving, investing, and giving. Without this transfer of wisdom, money becomes a burden instead of a blessing. Teaching begins with example. Children learn more from what you do than from what you say. If you manage money wisely, they absorb those habits. If you spend recklessly, they absorb that too. Every financial choice you make is a lesson to those who watch you. By living the science of money, you pass on not only resources, but resilience. You pass on not only fortune, but freedom. Another sustaining principle is stewardship. Wealth is not only for personal consumption, it is a trust, something you are responsible for managing wisely. Stewardship means caring for wealth as though it belongs not only to you, but also to those who will come after you. It means balancing enjoyment today with preservation for tomorrow. It means remembering that money is a tool, and tools must be maintained, sharpened, and used with respect. Hand in hand with stewardship is legacy. Legacy is not only about money left behind, but about the impact you leave on lives. A legacy of values, integrity, service, and contribution is more powerful than dollars. When your wealth reflects your values, it continues to influence long after you are gone. Many of the greatest philanthropists are remembered not only for the money they gave, but for the vision they carried. Legacy transforms wealth into history, memory, and inspiration. But wealth can only create a positive legacy if it is aligned with happiness.
And here we uncover another principle. Wealth without happiness is poverty in disguise. Many chase money only to discover that it does not automatically bring joy. True happiness comes from growth, connection, contribution, and purpose. Money can enhance these things, but it cannot replace them. The science of money reminds us always to ask, what kind of life am I building with this wealth? Does it bring me closer to joy, fulfillment, and love? Happiness is not found in excess, but in balance. Too much focus on accumulation leads to obsession, stress, and emptiness. Too little focus on money leads to struggle, dependency, and fear. The science of money teaches us to find the balance point. Enough money to provide security, freedom, and contribution, but not so much obsession with it that life itself is lost. Balance also means aligning work with joy. The wealthiest individuals often love what they do. They choose work that energizes them, challenges them, and expresses their gifts. As a result, they work harder and longer than others, but it feels less like work and more like passion. When you align your work with what you love, money becomes a natural byproduct of joy. When you force yourself to do what you hate, money becomes painful and hollow. The science of money encourages us to seek alignment, to do what we love, serve others through it, and allow money to flow as a reward. Another sustaining truth is that wealth attracts responsibility. As your wealth grows, so does your influence. People look to you for leadership, guidance, and generosity. Your choices ripple outward. The wealthy who endure are those who accept this responsibility with grace. They use their wealth to uplift others, to create opportunities, to build communities. They understand that with greater power comes greater responsibility. This sense of responsibility deepens their character and ensures their wealth is used for good. Now let us speak about freedom, the ultimate promise of wealth. Freedom is the ability to choose where to live, how to work, whom to help, how to spend your days. Money does not guarantee happiness, but it does provide options. It frees you from dependency, from fear of sudden emergencies, from the dictates of others. Freedom is the true goal of money, not luxury, not excess, but freedom.
I don't want
Freedom
that
is
weekend this
created
high.
by financial independence, when passive income exceeds expenses. At that point, you are no longer bound to work for survival. You may still choose to work, but it is from choice, not necessity. Financial independence is one of the highest achievements in the science of money. It requires years of discipline, patience, and persistence, but once reached, it provides a foundation for a life lived on your terms. Yet freedom is not only external, but internal. Internal freedom is the ability to master your desires, to resist unnecessary consumption, to live content with enough. Many are prisoners of desire, always wanting more, never satisfied. The wealthy who are truly free are those who master desire instead of being mastered by it. They enjoy abundance without addiction, success without greed, comfort without complacency. This inner freedom is as important as financial independence. We have journeyed through the science of money, exploring its principles, its habits, and its deeper truths. And now, as we draw to a close, let us weave together the final understanding.
Wealth is both an outer reality and an inner journey. It is not only about what you earn and invest, but also about who you become in the process. The outer side of wealth is visible: income, assets, investments, net worth. It is measurable, quantifiable, and often displayed. But the inner side of wealth is less visible: discipline, vision, gratitude, purpose, and resilience. Yet it is this inner wealth that creates, sustains, and multiplies the outer wealth. Without inner strength, outer wealth crumbles. With inner mastery, outer wealth
Me,
becomes inevitable. At the core of this
I'm
mastery is
maybe gonna
responsibility.
wait for Price to come back
Every step
into
of
this.
financial growth begins when you say, I am responsible for my life, my choices, my results. Not luck, not government, not economy, not chance, me. This responsibility liberates you from excuses and empowers you with possibility. Responsibility says, if I am the cause, I can also be the cure. If I created my situation, I can also create a better one. The wealthy carry this mindset always. The science of money also teaches us the importance of clarity. You cannot hit a target you cannot see. You cannot build a future you cannot define. Clarity transforms vague hopes into specific goals. Write them
Bit
down.
of a
State exactly how much you want to earn, save,
1,000
invest, and give.
so
Put timelines on them. Review them daily. Each act of clarity sharpens your focus, and focus attracts results. But clarity without action is nothing. Wealth is built on small, repeated actions: saving before spending, reading instead of watching, investing instead of consuming, serving instead of complaining. Small actions, compounded over years, create great fortunes. The science of money is not magic, it is mathematics, and mathematics rewards discipline. Discipline is the master key. Without it, goals fade, plans collapse, and wealth evaporates. With it, even modest beginnings grow into greatness. Discipline means living below your means, saving consistently, learning continually, serving diligently. Discipline is the daily proof that you take your future seriously. It is the silent builder of fortunes, the quiet sculptor of freedom. The science of money also emphasizes the role of learning. Every fortune begins with an educated mind. Read books on finance, study the strategies of the wealthy, learn from mistakes, your own and others. The marketplace pays for value, and value is built from knowledge and skill. Each hour you spend learning adds to your earning capacity. Each new insight strengthens your financial foundation. Wealthy people are lifelong learners. They never stop. Yet as knowledge grows, humility must remain. Wealth can tempt arrogance, but arrogance blinds. Stay humble, stay teachable, stay alert. Listen more than you speak. Learn from everyone: the successful, the struggling, even the skeptical. Every perspective holds a lesson. The moment you stop learning, you stop growing. And the moment you stop growing, your wealth begins to decline. The science of money also reminds us that wealth is service.
Every dollar you earn is proof that you improved someone's life. If you want to earn more, serve better, solve bigger problems, reach more people. The wealthiest people are those who have impacted millions, sometimes billions of lives. But even at smaller scales, the principle holds true. Your rewards in life will always be in proportion to your service. And service leads naturally to contribution. Wealth without giving is incomplete. Contribution transforms money from a personal possession into a public blessing. It creates meaning, legacy, and joy. It turns wealth into something larger than yourself. When you give, you affirm abundance. You expand gratitude, and you open the door for greater flow. Giving is not the opposite of wealth, it is the crown of wealth. The final truth is this: wealth is freedom. The purpose of money is not greed, not endless accumulation, not mindless luxury. The purpose of money is choice: the choice to live where you want, work how you want, spend time with whom you love, contribute to what you believe in. Money gives you the ability to say yes to your dreams and no to your fears. It buys time, security, and peace of mind. That is the real wealth, not the numbers in your account, but the freedom in your heart. And yet, freedom must be matched with gratitude. For without gratitude, wealth becomes empty. Gratitude transforms each step of the journey into joy. Gratitude sees not only the destination, but also the road. Gratitude multiplies what you have and prepares you for more. To be wealthy and ungrateful is to be poor in spirit. To be grateful, even with little, is to be rich already. So the science of money, when all is said and done, is not only about getting rich. It is about becoming wise. It is about learning to live with discipline, responsibility, service, gratitude, and vision. It is about creating wealth not just in your bank account, but in your mind, your character, your relationships, and your contribution to the world. The formulas are clear. The laws are certain. If you save before you spend, invest before you indulge, learn before you leap, serve before you demand, and give before you give, then wealth in all its forms will flow to you. It cannot be otherwise. For these are not just ideas, they are laws. And laws, when followed, produce predictable results. Now the choice is yours. You can continue as before, hoping for better luck, waiting for external change, drifting with circumstances. Or you can choose today to take control, to align with the laws of wealth, to discipline yourself, to learn, to serve, to save, to invest, to give, to grow. If you do, your future will transform. Perhaps not instantly, but inevitably.
Bro, this shit is
The
not
science
fair,
of
man.
money
What is
is not a
this?
mystery,
Oh,
it is a map. And when you follow the map faithfully,
bro.
with patience and persistence, it will lead you to freedom, abundance, and a life of true wealth.
In the unpredictable world of financial markets, success is rarely the result of luck. It comes to those who approach the game with structure, discipline, and an unwavering commitment to preparation. Trading is not gambling, it is a business. And like any business, it requires a plan, capital, tools, and a mindset calibrated for survival and growth. Before the first and most crucial principle of high probability trading is to treat trading as a profession. This simple idea is where most people go wrong. Many are lured in by the glamour of fast money, tempted by stories of overnight success. But those who survive and thrive understand that success in trading is born from preparation, not intuition. To watch regular content like this on trading and finance audiobooks, make sure to subscribe to the channel. We bring you the best insights to grow your wealth and sharpen your trading skills. Tap that subscribe button now and let success follow. It begins with setting realistic expectations. The markets are not a place where you double your money every week or even every month. Trying to turn a small amount into a fortune quickly often leads to disaster. Instead, focus on consistent, modest gains that, when compounded, can lead to significant long-term wealth. To make consistent profits, one must first protect capital. Preservation of capital is the lifeblood of a trading career. You don't get rich by making money. You get rich by not losing it. Every dollar lost is a dollar that must be made back, and doing so becomes harder with each drawdown. A 50% loss requires a 100% gain just to break even. That's the math that destroys many aspiring traders before they even get started. Once capital protection is established as the foundation, the next pillar is the development of a plan. A trader without a plan is like a pilot flying through a storm without instruments. Your plan must include your strategy, your entry and exit criteria, the markets you will trade, your risk parameters, and even your schedule. The more detailed the plan, the better prepared you will be for the unpredictable. Part of your plan must include risk management. This is the difference between professionals and amateurs. Professionals manage risk with the same seriousness that a surgeon handles a scalpel. Before placing any trade, you must know exactly how much you're willing to lose. Never risk more than a small percentage of your capital on any one trade. Typically 1% to 2% is reasonable. This ensures that no single trade can wipe you out. Proper risk management also involves knowing when to exit. Many traders can find good entries, but they fail to protect profits or limit losses because they lack a defined exit strategy. Exits must be based on objective criteria, technical levels, volatility ranges, or price patterns, not emotions or hope. It's equally important to know yourself. Self-awareness is the hidden edge of trading. You must understand your psychological tendencies. Do you freeze when the market moves against you? Do you chase trades when you feel left out? Do you get overconfident after a string of wins? These tendencies are not flaws, they are human. But recognizing and managing them is what separates consistent traders from the emotional majority. A good trader accepts losses as part of the process. Losses will happen. You will never win every trade. The key is to make sure your winners are larger than your losers and that your losers are controlled. When you internalize this truth, you stop taking losses personally and begin to see them as the cost of doing business. Discipline is your most valuable tool. It's what keeps you from taking trades outside your plan. It's what prevents you from adding to losing positions. It's what reminds you to take breaks when your mind is fatigued. Without discipline, even the best strategy will fail. With discipline, even a simple strategy can become a consistent performer. Beyond discipline lies patience. Trading isn't about constant action, it's about waiting for the right moment. High probability trades are rare, and a trader must wait for conditions to align. This might mean sitting in front of the screen for hours without placing a trade. That's not wasted time. It's the cost of waiting for opportunity. Traders must also respect the importance of preparation. Every day begins the night before. Successful traders study charts, plan scenarios, and mentally rehearse their trades in advance. By the time the market opens, they already know what they're looking for and are simply executing on that preparation. Journal keeping is another cornerstone. Every trade should be recorded with details: entry, exit, rationale, emotional state, outcome. Over time, these notes become a mirror, revealing your strengths, weaknesses, and tendencies. This reflection allows for adjustment, refinement, and growth. The difference between winning and losing in the markets often lies in the margins. Tiny improvements, tighter entries, more disciplined exits, better timing can turn a break-even trader into a profitable one. But these improvements only come from continuous learning and honest self-evaluation. Technology is your ally, but not your crutch. Use tools wisely. Charting platforms, scanners, news feeds, but don't become a slave to them. Know how to read the market yourself. Understand price action, volume, support, and resistance. These are the universal languages of the market, and they don't change with time. Understand that market conditions are fluid. A strategy that works in a trending market might fail in a range-bound one. A setup that produced profits last month may deliver losses today. Adaptability is the trait that keeps traders alive across changing environments. Be flexible in your tactics, but unwavering in your principles. Avoid the temptation of overtrading. The market is not a casino, and your trading account is not a slot machine. Every trade should have a reason. Taking trades out of boredom, frustration, or revenge will erode your capital and your confidence. Trade only when your setup appears and all criteria are met. Learn to analyze your edge. Ask yourself, what gives me a probability of success? Is it a technical pattern, a news reaction, a volatility condition? Know your edge, quantify it, and only trade when that edge is present. Anything else is noise. Keep your focus tight. It's better to become an expert in a few setups or markets than to dabble in dozens. Specialization allows for deeper insight and stronger intuition. Over time, you will begin to feel the rhythm of your chosen market and anticipate moves that others miss. Finally, never stop learning. The market is an evolving organism shaped by millions of participants. To remain relevant, you must continue to study, adapt, and grow. Read, observe, test new ideas. Stay humble in victory and introspective in defeat. The mental side of trading cannot be overstated. Every action, every hesitation, every impulsive click of the mouse comes from a mind, and more specifically from the subconscious beliefs that govern our behavior. If you believe trading should be fast, exciting, or feel like winning a game, you're already on the wrong path. Trading is about calm, consistency, and clarity. It's not about being right. That's where ego often gets in the way. Many traders tie their identity to their performance. When a trade goes wrong, they feel personally attacked by the market. But the market is indifferent. It doesn't know who you are, and it doesn't care about your opinions. The goal isn't to prove your analysis was correct. It's to manage your money effectively and survive long enough to thrive. Your job is not to predict, it's to react. Prediction creates expectations, and expectations lead to emotional disappointment. But reaction keeps you fluid. When you trade reactively, you wait for the market to show its hand. You observe. You respond to what is, not what you hope or fear will be. Over time, this builds a certain mental calm. You no longer chase trades. You no longer panic when a position moves against you. You start to think in terms of probabilities, not certainties. You stop looking at individual trades in isolation and begin seeing your results over hundreds of trades. One loss becomes just a pixel in a larger picture. And that shift from micro to macro unlocks your emotional stability. Every high probability trade setup comes from identifying repeatable patterns. The markets, though chaotic, have tendencies. Price often reacts at support and resistance. Momentum often fades after sharp spikes. Trends often pause before continuing. But these patterns must be studied, observed, and backtested, not guessed. Data gives you confidence. Observation gives you intuition. Together, they form conviction. And conviction matters. Not the loud, overconfident kind, but the quiet, internal kind, the confidence that comes from preparation. That tells you, this trade aligns with my setup, meets my rules, fits my risk tolerance, and has proven itself over time. When you trade with this level of clarity, fear reduces. Doubt shrinks. You still experience losses, but they no longer shake your foundation. This is where many fail. They want certainty where only probability exists. So they jump from system to system, strategy to strategy, hoping to find something that never loses. But there is no such system. Even the best strategies have losing streaks. The secret is in managing those periods without letting emotions take control. A good strategy with discipline will outperform a perfect strategy with inconsistency. Discipline, however, is not about being rigid. It's about being structured. Structure gives you freedom. Freedom from over-trading, from second-guessing, from a simple. You follow the plan or you don't trade. That binary clarity keeps you grounded. In this clarity, you'll also notice the difference between setups with true potential and those that simply tempt you. Some trades will have strong alignment across time frames, momentum, volume, and context. Others might look good in isolation, but feel forced. The more you practice, the better you'll get at filtering noise from signal. Good trades don't just appear. They emerge from a confluence of conditions. Look for harmony between multiple indicators, price action, and market context. For example, a breakout at resistance is more powerful if it's accompanied by strong volume, aligned moving averages, and favorable news sentiment. This convergence is where the high probability edge lies. But that edge is only useful when you have the patience to wait for it. Impatience is one of the costliest emotions in trading. It leads to early entries, late exits, revenge trades, and overexposure. Waiting is hard because the market is always moving. But just because something is happening doesn't mean you need to participate. The best traders spend most of their time waiting, not trading. And while you wait, your mind is working, scanning, observing, planning. This mental rehearsal strengthens your confidence and hones your edge. Visualization is powerful. Imagine yourself entering a trade exactly at your setup, managing it with calm precision, exiting at your target. When the real moment comes, your mind has already been there. That familiarity breeds composure. However, even with preparation, losses will come. What matters is how you respond. A trader with emotional control sees a loss and asks, "Did I follow my plan?" If yes, then it was simply part of the game. If no, then it becomes a lesson, not in strategy, but in self-management. The best feedback isn't whether you made money, it's whether you stuck to your plan. Mistakes happen. Everyone has them. But repeating mistakes is a choice. That's where your journal becomes essential. It doesn't just track your trades, it tracks your behavior, your mindset, your triggers. Did you rush in because you're bored? Did you exit too early out of fear? Each note becomes a data point, and those data points become patterns. Fix the pattern, and you fix the performance. Eventually, your trading becomes less reactive and more automatic. Your setups become second nature. Your risk tolerance adjusts to your capital. Your mind grows accustomed to uncertainty. You begin to trust the process, even when results lag. This is what separates short-term survivors from long-term professionals. Another overlooked component is your environment. Your workspace affects your mind. A cluttered desk creates scattered thoughts. Too many monitors can overwhelm you. Distractions, TVs, Phones, background noise, reduce your focus. Your trading space should be sacred, clean, quiet, organized. Your mental state reflects your surroundings. So does your lifestyle. Trading performance doesn't happen in isolation. It's linked to your sleep, your nutrition, your exercise, your relationships. A foggy mind can't make sharp decisions. A stressed body can't sit through volatility. Your overall health contributes directly to your edge. You are your most important trading tool. Treat yourself accordingly. And while trading is solitary, you don't have to be alone. Surround yourself with traders who share your values. Patience, discipline, preparation. Avoid those chasing hot tips, fast profits, or guaranteed signals. Community can provide accountability, support, and perspective, but only if it's rooted in wisdom, not hype. In the end, high probability trading is not about complexity. It's about clarity, knowing your setup, knowing your risk, knowing yourself, and then executing with calm consistency, day after day, trade after trade. Success doesn't come from brilliance. It comes from doing the right things over and over without deviation. This path is not glamorous. It's not filled with adrenaline and excitement, but it's reliable, sustainable, profitable, the kind of trading that builds wealth, confidence, and freedom, the kind that allows you to sleep at night, knowing your money is working within a system you trust. And that is the trader's true reward. Not just financial gain, but mastery over the self. Not just wins on a chart, but growth in discipline, patience, and clarity. In trading, as in life, the real victory lies not in the results, but in who you become through the process. A high probability trader sees beyond the surface of a market. Where most people see candles, patterns, and numbers, this trader sees behavior, human behavior expressed in price. Each uptick and downtick reflects emotion, fear, greed, hope, regret. Understanding these emotions gives the trader an edge that indicators cannot provide. Because the market at its core is not a machine, it's a crowd. And crowds follow patterns. Think about what price really is. It's a reflection of what buyers and sellers agree upon in real time. When buyers feel optimistic, prices rise. When sellers panic, prices fall. The goal, then, is to spot these emotional inflection points before they become obvious to everyone else. That's when the opportunity is greatest and the risk is lowest. One powerful way to read emotion is through volume. Volume tells you how much conviction is behind a move. A breakout with weak volume? Often a trap. A breakout with surging volume? That's strength. When volume confirms price action, it increases the probability that the move is genuine. It becomes a vote of confidence by the market crowd. Another way to read emotion is through consolidation. When a market moves sideways for a while, it's building pressure. Traders are positioning, absorbing supply, hesitating. And when it finally breaks out of that range, the energy released can lead to sharp trends. These breakout moments, especially from tight consolidations, are fertile ground for high probability trades. Still, you must avoid the trap of chasing. Once a breakout has already moved significantly, the risk to reward often becomes poor. By the time it feels safe, it's usually too late. High probability traders don't enter late, they anticipate. They enter near the edge of structure, where the risk is minimal and the upside is greatest. To do this well, they must think ahead. That's where scenario planning comes in. Before the market opens, they've already asked, if price does this, I'll do that. If it does something else, I'll step aside. They aren't reacting emotionally to surprises. They've rehearsed every possibility. This mental preparation reduces hesitation and builds confidence in the heat of the moment. But confidence must never become arrogance. That's the line that ruins many careers. The moment you believe you've mastered the market, it will humble you. The moment you think you can skip a rule just this once, you invite chaos. Humility is what keeps your edge sharp. It reminds you that the market is always bigger, always smarter, always one step ahead. You're not here to beat it. You're here to flow with it. This flow comes from repetition, from trading the same setups hundreds of times, from knowing how your system performs across different market conditions. High probability traders become specialists. They don't dabble, they drill deep. They don't try to catch every move. They focus on the ones they understand best. This selective approach improves results and reduces stress. And it's not just what you trade, it's when. Time of day matters. Volume is different in the morning than in the afternoon. Volatility shifts around economic news releases. Liquidity dries up near holidays. Knowing when not to trade is just as important as knowing when to act. The absence of opportunity is not a loss. It's a victory of discipline. Your trades should be boring, not because they lack excitement, but because they follow a process. If your trades are driven by emotion, by impulse, thrill, or fear, they're already off track. But if each trade feels routine, methodical, almost mechanical, then you're on the right path. Boredom in execution leads to excitement in results. In building a high probability approach, simplicity often wins. Complexity can cloud judgment. Too many indicators, too many rules, too many variables, and you freeze. Or worse, you bend the rules to justify a poor decision. A clean chart, a clear setup, a defined risk, and a focused strategy. That's the formula. Add only what enhances your edge. Remove what adds confusion. Your stop loss isn't just a safety net, it's a decision. It says, this is the point where my setup is invalid. If price hits it, I'm wrong, and I accept that. Many traders widen stops to avoid the pain of being wrong, but this only increases losses. Others place stops too tight, try to avoid risk altogether, and get shaken out constantly. A good stop is based on structure, not emotion. Likewise, your target should be realistic, not based on dreams or past trades, but on what the market is actually offering. If a breakout typically moves 20 points, don't expect 100. Greed stretches targets beyond reason and often turns winners into losers. By taking profits within the rhythm of the market, you maintain consistency, and consistency compounds. Scaling in and out can also enhance probability. You don't need to go all in on every trade. Entering in portions allows flexibility, reduces pressure, and gives you better average prices. Exiting in portions locks in gains while letting winners run. This staggered approach smooths out volatility and helps maintain emotional balance. Every trade should begin with a question: what's the risk? If the risk isn't acceptable, walk away. If the setup is unclear, skip it. Your edge isn't just about finding good trades, it's about avoiding bad ones. Each avoided trade that would have lost money is a silent victory. Protecting your account is the highest form of skill. Drawdowns are inevitable. Even the best systems will go through rough patches. What matters is how you navigate them. Reducing size, taking breaks, reviewing your journal. These steps preserve both capital and confidence. Fighting the market, doubling down, trying to make it back. These are the reactions of gamblers, not traders. Accepting the cyclical nature of performance helps you ride through slumps and keep perspective during winning streaks. Never assume a winning streak will continue indefinitely. Never assume a losing streak will last forever. Everything changes. Your job is to remain consistent while the market evolves. High probability trading isn't about speed, it's about precision. One well executed trade can outweigh 10 reckless ones. And often, the best move is no move at all. Inaction, when rooted in discipline, is an action in itself. Professional traders spend more time waiting than trading. They are patient students of price. They let the market come to them. This patience is a superpower because it creates space for clarity. Clarity leads to good decisions. Good decisions, repeated over time, lead to profit. You're not in the market to feel something. You're in the market to execute a plan, to identify a high probability scenario, to define risk, to enter with intention, and to exit with control. Emotion clouds that mission, but process purifies it. That's what builds consistency. And consistency, not brilliance, is the foundation of success. There's a quiet truth that successful traders all understand. Trading is lonely. Not in a negative sense, but in a necessary one. When you place a trade, it's just you and the market. No crowd to cheer you on. No boss to approve your decisions. No teammates to share the weight. You carry the entire burden of accountability. And from that solitude comes responsibility. Responsibility is the essence of mastery. It means you own your outcomes. Every profit, every loss, every trade taken or missed. There's no one else to blame and no one else to credit. In that space, your trading becomes personal, not emotional, but internal. You begin to evaluate yourself with honesty. Did you follow your rules? Did you control your risk? Did you manage your state of mind? The market is the ultimate mirror. It reflects not just your skill, but your discipline, your patience, your ability to focus. A trade gone wrong will show you your weakness, greed, fear, ego, impatience, if you're willing to look. Most traders lose not because they lack knowledge, but because they avoid that mirror. They shift blame. They deny flaws, and so they repeat mistakes. But for the trader who looks inward, every loss becomes data. Every mistake becomes growth. Every drawdown becomes feedback. There's no wasted experience, only unexamined experience. The beauty of this profession lies in its purity. There's no favoritism, no politics, no promotions to chase. You are paid directly in proportion to your discipline, your focus, and your ability to execute under pressure. That clarity is rare in life, and it makes trading both unforgiving and incredibly rewarding. But to earn those rewards, you must respect the craft. That means creating routines that support performance. The best traders start their day hours before the market opens. They review overnight news, scan for setups, prepare their watch list, visualize potential trades, and check for any signs of emotional interference, fatigue, stress, distraction. This preparation grounds them. It quiets the mind. It sets intention. By the time the opening bell rings, they're not reacting. They are waiting. Their plan is written. Their levels are marked. Their expectations are set. And their role is clear: to follow the process, not chase the outcome. In this state of readiness, the trader watches, not like a gambler eyeing the next spin of the wheel, but like a hunter, still, focused, patient, observing price action, scanning volume, feeling the tempo of the market, waiting for alignment. When the setup appears, the decision is fast but never rushed. The trade is taken with clarity. The stop is already placed. The target already chosen. Now it's just about management. Trade management is an art form in itself. Some trades require firm conviction and full size. Others call for a light touch and quick adjustments. There are times to sit through noise and let the market breathe. And there are times to cut the trade early and reassess. Experience teaches you this rhythm, not rules etched in stone, but instincts sharpened by repetition. It's important to understand that every trade has a lifespan. Entering too early invites unnecessary risk. Holding too long exposes you to reversal. The sweet spot lies in the balance between opportunity and safety. Finding that balance takes time and a willingness to learn from both wins and losses. As you grow, your focus shifts from individual trades to your overall equity curve. You stop obsessing over whether one trade is green or red. Instead, you track your progress across weeks and months. You look for consistency, for smoothness, for control, and you begin to ask better questions. Am I improving? Am I making fewer impulsive decisions? Am I staying within my rules? This shift from trade by trade obsession to long term performance is where maturity begins. You stop trying to win today. You start aiming to survive this year and the next and the next. Your ego detaches from being right and attaches to being consistent. That's when you become dangerous in the best way possible. You also start to see the market as a teacher. Every day, it presents lessons, some subtle, some loud. Lessons about patience, timing, greed, fear, humility. The traders who listen grow. The ones who ignore repeat the same errors. The market does not punish or reward, it simply reflects. And it reflects quickly. One moment of lapse, one deviation from your plan, one revenge trade, one oversized position, and weeks of progress can be erased. That's why high probability trading is built on routines, systems, guardrails. A disciplined trader isn't perfect. They've simply built an environment that minimizes the chance of destruction. That includes managing expectations. Not every week will be profitable. Not every setup will work. Some trades will stop out by a tick. Some will miss your entry by a hair. Some will hit your target and then run further. And that's okay. The goal is not to catch every move. The goal is to be in control of your risk and let the probabilities play out over time. Because over time, your edge reveals itself, not in any single trade, but in the pattern of disciplined execution. You start to trust the process. You stop micromanaging outcomes. You start thinking like a casino, not focused on the result of one spin, but on the statistical advantage across hundreds. And like a casino, you want to limit exposure to randomness. That's why risk management isn't just important, it's sacred. Small losses are part of the game. Large losses are optional. You decide whether to take them. You decide whether to add to losers, to remove your stop, to trade too big. Those decisions are where careers are made or lost. Trading should be dull, not emotionally, but procedurally. It should feel routine, even mechanical. A trade comes along, you analyze, you enter, you manage, you exit, then you move on. If you find yourself sweating, pacing, overchecking charts, step back. That's not trading. That's hoping. Hope has no place in trading. Neither does fear. You trade the plan, or you sit out. You accept the loss, or you learn from it. You book the win, or you move to the next. Emotion clouds judgment, but process clears it. This is why the real work is mental. The strategies are out there: technical patterns, price action, volume setups, moving averages. They're all tools, but tools don't build houses. Craftsmen do, and the mind of the craftsman determines the quality of the build. So invest in your mindset. Practice mindfulness. Learn to sit with discomfort. Develop routines that stabilize you. Take breaks when needed. Celebrate discipline, not just profit. Reward process, not just wins. Build the mental muscle that makes trading sustainable. Because in the end, trading is a marathon, and high probability traders aren't sprinting. They're pacing themselves. They know that consistent execution, small gains, small losses, and mental stability will carry them further than any shortcut or hype ever could. There's a profound shift that happens when a trader stops asking, "How much can I make?" and instead starts asking, "What am I risking?" That one question changes everything. It reframes the entire mindset from greed to stewardship, from chasing wins to managing exposure. And that's the beginning of true professionalism in trading. Risk is not something to fear. Risk is simply the cost of potential reward. What matters is whether the cost is worth paying. If you enter a trade with a wide stop and a tight target, you're risking more than you stand to gain. Over time, that imbalance will drain your capital, no matter how often you're right. But if your setups give you 2 or 3 units of potential profit for every unit of risk, then even a win rate below 50% can yield consistent results. This is where the math of trading becomes your friend. Many ignore the numbers and rely on feeling. But trading is a numbers game. If you risk 1 to make 3, you only need to be right about 33% of the time to break even. Anything above that, and you're profitable. That's the power of asymmetric risk. But to benefit from that asymmetry, you must protect it. That means exiting losers quickly and giving winners room to breathe. Cutting losses is a skill most traders avoid learning because it feels like failure. But in truth, it's the most courageous decision a trader can make. It says, "I was wrong. This is not working. I will preserve my capital and wait for a better opportunity." Letting winners run, on the other hand, requires patience. The market doesn't always move in straight lines. It breathes, it pauses, it fakes out, and it often tests your nerve. High probability traders understand this. They don't exit the moment a candle turns red. They watch the structure. They track volume. They assess whether the overall thesis still holds. If it does, they stay in. If it doesn't, they exit without regret. Regret is a toxic companion in trading. It leads to second guessing, to revenge trades, to overcorrection. But if you follow your plan, there's no room for regret. Whether the trade wins or loses, you acted in alignment with your process. And that's what matters most, not outcome, but integrity of execution. Still, even the most disciplined trader will face losses that sting. Trades that should have worked but didn't. Markets that gap against you unexpectedly. Setups that align perfectly, only to fail without explanation. These moments test your resolve. And in these moments, it's essential to remember randomness plays a role. Not every move is predictable. Not every setup will follow through. That's why we talk about probabilities, not certainties. A high probability setup is still just that: high probability, not guarantee. Accepting this truth frees you. You stop needing to be right all the time. You start thinking in terms of edge. Over dozens, over hundreds of trades, your discipline becomes your edge. And it's not just market conditions that change. You change. Some days, your focus is sharper. Your emotions are quieter. Other days, stress creeps in. Your mind wanders. You hesitate. You rush. That's normal. You're human. But being human means you must also manage yourself like a machine, with routines, with boundaries, with feedback loops. One of the most powerful boundaries is your daily loss limit. When that number is hit, you stop. No questions, no exceptions. Because if you don't, you risk falling into emotional trading. And emotional trading leads to oversized positions, poor entries, broken rules, and eventually account blowups. Your loss limit is not a weakness. It's protection. It's a circuit breaker. It keeps you in the game because staying in the game is the only thing that matters. You can't make back losses tomorrow if you destroy your account today. This long-term perspective is what sets apart those who survive. They know that trading is not about the next trade. It's about the next 1,000 trades. And if your next 1,000 trades are governed by rules, discipline, and risk control, you have a statistical edge that will serve you well. The temptation to go big is always there, especially after a win, especially after a loss. But size is not the answer. Size magnifies both reward and risk. If you size up before your system is proven, you're not scaling, you're gambling. Growth in trading should be incremental. Earn the right to size up. Prove that your process works first, then add size cautiously, methodically. Let your equity curve be your guide. If it's smooth, upward sloping with drawdowns under control, you're ready to test with more size. But if your curve is jagged, emotional, erratic, focus on consistency first. Consistency is your base. From there, you can grow with confidence. Consistency is not just about results, it's about behavior. Are you showing up the same way each day? Are you trading your plan every time? Are you journaling your thoughts, your mistakes, your improvements? That behavioral consistency is what leads to performance consistency. And when consistency meets adaptability, you become resilient. Markets evolve, volatility spikes, then contracts, trends shift, news shocks the system. A good trader doesn't fight these changes, they flow with them. They observe, they adjust, they stay rooted in their principles but flexible in their methods. For example, a trend strategy may work beautifully in a breakout market, but struggle in a choppy one. Recognizing this shift early allows the trader to reduce risk, stay sidelined, or temporarily switch to a range-based approach. But doing this requires awareness. Awareness comes from observation, from journaling, from reviewing not just trades, but environments. Ask yourself, what kind of market are we in? Is it trending or ranging? Fast or slow? Liquid or thin? Volatile or quiet? Tailoring your strategy to the environment is like adjusting your sails to the wind. You don't control the market, but you do control how you respond. This responsive mindset is empowering. It means you're no longer a victim of the market. You're an interpreter, a strategist, a decision maker. You wait for the market to present its terms, then you decide. Enter or wait, risk or protect, pursue or stand out. And always, you are managing capital, because capital is your oxygen. Without it, the game ends. That's why protecting it is more important than growing it. If your focus is purely on gain, you will eventually take a loss so big it wipes out months of progress. But if your focus is on managing drawdown, on staying alive, the gains will come in time and with staying power. Sustainable trading isn't about hitting it big. It's about showing up every day, executing with consistency, learning from every session, and improving by just 1% each time. Those small gains stack. They become skills, habits, confidence. They become a career. That career doesn't require brilliance. It requires humility, patience, a relentless respect for process, and most importantly, the willingness to do the boring work, the reviews, the journals, the prep, long after the excitement wears off. Because that's where greatness lives, not on the highlight reel, but in the shadows, in the hours no one sees, in the trades you didn't take, in the risks you didn't ignore, in the plan you followed, even when it was hard. Trading rewards those who think in probabilities and punishes those who act on certainty. The moment you believe the market owes you something, you're setting yourself up for disappointment. But when you accept uncertainty as part of the design, you begin to make peace with the randomness that surrounds every trade. And that peace, paradoxically, makes you sharper. In that mental space, you no longer feel betrayed when a setup fails. You don't feel invincible when a trade hits target. You simply observe and record. You act, then let go. This emotional detachment is not apathy, it's discipline. It's the ability to stay connected to your plan without being entangled in the outcome. That's where real power begins. One of the hallmarks of advanced traders is the ability to recognize noise. Every tick, every candle, every spike of volume. It's tempting to think it all means something, but most of it doesn't. Most of it is just the market breathing, reacting to liquidity, shuffling between orders. High probability traders develop the skill of filtering. They know when a move is meaningful and when it's just background static. They also understand that not every session is worth trading. Some days, the market is choppy, directionless, or erratic. Economic news looms. Liquidity dries up. Sentiment is unclear. On these days, staying out is the smartest move. A missed trade is not a loss, but a poorly timed trade can start a chain of bad decisions. There's wisdom in restraint. Knowing when not to trade is a superpower. It's a trait that speaks to maturity, to experience, to self-mastery. The newer trader feels compelled to be active, to prove themselves, to capture every opportunity. But the experienced trader knows one clean trade is worth far more than 5 sloppy ones. This clean trade, when it comes, is not taken lightly. It's selected, waited for, qualified. Every element aligns: the setup, the volume profile, the price structure, the broader context. When it all clicks, the decision is easy. No fear, no hesitation, just execution. That's what preparation buys you. Not perfection, but certainty in the moment of action. And once you're in the trade, the work continues. You don't abandon it. You monitor, but you don't obsess. You let the trade breathe. You honor the plan. If the trade works, you manage it to your target. If it fails, you exit with clarity. There is no bargaining, no moving stops out of hope, no doubling down, just control, just calm. This level of control isn't developed in a day. It comes from repetition, from logging dozens, hundreds of trades, from seeing what works and what doesn't. It comes from making mistakes, documenting them, and promising not to repeat them. Every mistake has a cost, but also a lesson. And when a lesson is learned, the cost becomes an investment. That's why journaling is a non-negotiable for serious traders. The journal is your memory bank, your mirror, your coach. It shows you not just your trades, but your patterns, your emotional habits, your lapses in discipline, your improvements over time. With enough data, your journal becomes a map. It tells you where you thrive and where you fall apart. You start to notice things. You trade best in the morning hours. You lose focus after 2 losing trades. You rush entries when you skip your morning prep. These are not quirks, they're insights. And those insights allow you to make changes, to tighten your edge, to strengthen your process. And it is process that wins. Not indicators, not systems, not setups. Process. The invisible structure that holds your trading life together. It's how you prepare, how you analyze, how you execute, how you review. The more refined your process, the more resilient you become. You'll need that resilience because the market will test you. It will offer streaks, both of wins and losses. It will show you months of calm, followed by weeks of chaos. It will tempt you, frustrate you, reward you, then humble you. This is the nature of the game. There is no final level, no finish line, only evolution. Evolution means constantly adapting, improving your execution, reviewing your data, evolving your rules as your skills mature. What worked 2 years ago may be less effective now. Market structure shifts, algorithms evolve, participants change. Your edge must evolve too, but you can't evolve if you're not measuring. Track everything: entry accuracy, exit timing, risk-reward ratio, win rate, average loss size, time and trade. The numbers reveal what your memory often distorts. You might feel like your setups are solid, but if the numbers disagree, it's time to adjust. Let the data humble you. Let guide you. And don't confuse activity with improvement. More trades don't mean better trading. In fact, many traders improve by doing less, fewer trades, cleaner setups, tighter rules. Simplicity brings clarity, and clarity drives confidence. Confidence, however, must be earned, not through wins, but through repetition, through executing your edge even on tough days, through sticking to your stop even when it hurts, through pausing after a losing streak to reflect, not react. That's how real confidence is built, not from external results, but from internal integrity. You start to believe in yourself, not because you always win, but because you always follow your plan. That consistency creates a solid foundation. You stop fearing failure because you've learned how to survive it. You stop craving wins because you've seen that they come naturally when process is honored. At this level, you start to think differently about goals. It's no longer about hitting a specific dollar amount. It's about growth, mastery, sustainability, about showing up every day as a focused, disciplined operator. The money becomes a byproduct, not the obsession. That's when trading shifts from chaos to calm, from strain to flow. It becomes a craft, a practice. You begin to love the process more than the outcome. And that, more than anything, protects you from burnout, from breakdown, from blowing up when things get hard. Because they will get hard. Everyone gets tested. But the difference between quitting and thriving is not talent. It's structure. It's self-awareness. It's the quiet discipline of those who choose the long game. So when the market is wild, when losses mount, when doubt creeps in, you fall back on process. You pause. You reset. You reduce size. You review. And you return Not chasing, not hoping, but prepared, grounded, present. There comes a point in every serious trader's journey where charts and numbers fade into the background and the focus turns inward. The real battlefield isn't the market, it's your own mind. And the longer you trade, the more you realize that consistent execution is less about skill and more about self-mastery. Self-mastery begins with honesty. Brutal, unfiltered honesty. You cannot hide from your weaknesses. Not for long. The market will find them. If you lack patience, it will bait you into overtrading. If you crave certainty, it will punish your need to be right. If you seek revenge after a loss, it will drain you dry. But if you're willing to confront these flaws, not with shame, but with curiosity, you gain power over them. Awareness is the first step, but awareness alone isn't enough. You must act on it. If you know that losses trigger impulsive behavior, you need a rule to pause after 2 losing trades. If you recognize that your best trades occur mid-morning, then focus your energy there. Structure your environment to protect yourself from yourself. This means you don't just need a trading plan. You need a personal operating manual, something that outlines not only your setups, but your own tendencies. When you lose focus, when you push size too soon, when you trade out of emotion instead of alignment, map it out, then create boundaries. Boundaries protect your edge. They are your guardrails in an uncertain world. They're what prevent you from spiraling after a mistake or overextending during a streak. You don't grow by pushing recklessly. You grow by staying within limits until your skills demand more space. True growth is quiet. It's not a sudden leap. It's a gradual strengthening of your process. You start catching yourself before you overtrade. You begin letting go of trades that don't align perfectly. You stop needing every move to succeed. This is the maturity of a high-probability trader, less driven by outcome, more guided by execution. At this level, edge becomes sacred. You no longer see your strategy as just a means to make money. You see it as a finely tuned engine. And like any engine, it needs maintenance, regular review, careful adjustment, not overhaul, not panic shifts, just refinement. One small improvement again and again. The power of compounding shows up in your behavior long before it shows up in your account. One less impulsive trade per week, one better exit per month, one more accurate journal entry each day. These are the shifts that transform break-even traders into profitable ones over time. And they're not exciting. That's the truth. There's nothing thrilling about staring at charts and doing nothing. There's no rush in following a rule for the 100th time. But that's where mastery lives, in the repetition, the control, the boredom of brilliance. You start to appreciate boredom. You understand that a boring trade is often a beautiful one. It means you followed your process. It means you weren't reacting, you were executing. And when trading becomes uneventful, your results often become extraordinary. This is the paradox most new traders miss. The more excitement you feel during a trade, the more likely you are operating from emotion. But the more it feels like routine, the more likely you're on solid ground. And this routine is built from repetition, but refined by review. Your journal is not a chore. It's a tool of transformation. The notes you take today become the insight you need next month. What you record reveals patterns invisible in the moment. That hesitation before you enter, that premature exit, that overconfidence after 3 wins. Over time, you see it all laid bare. Once seen, it can be adjusted. That's the beauty of review. It gives you data to shape decisions. You stop guessing. You start testing. You stop reacting. You start anticipating. And anticipation is the mark of a seasoned trader. You no longer need the market to prove you right. You wait for your edge. You size appropriately. You protect capital. You manage the trade without emotional attachment. Whether the trade wins or loses, you are stable. And that stability creates confidence. Not the loud kind, but the quiet kind. The kind that's rooted in preparation. With preparation comes peace. You stop needing the market to move. You stop feeling like you're missing out when you sit on the sidelines. You realize that not trading is often the highest form of trading because your value is not in your activity, it's in your selectivity. The more you grow, the more selective you become. You take only the clearest trades. You wait for the best confluence of signals. You avoid gray areas. You eliminate guesswork. And with each filtered trade, your results improve, not just in profit, but in mental clarity. Because every bad trade costs you more than money. It costs emotional capital. It shakes your confidence. It clouds your mind. But every disciplined trade, win or lose, adds to your foundation. It sharpens your focus. It reinforces your identity as a professional. And identity matters. The way you see yourself influences how you act. If you see yourself as someone who follows rules, you're more likely to honor them. If you see yourself as someone who respects risk, you'll protect capital. This identity is built by behavior, and behavior is shaped by environment. So control your environment, minimize distractions, create rituals, start each day with intention, end each session with review. Train your mind to associate your workspace with focus, discipline, clarity. These cues matter. They prime your brain for performance. And as performance stabilizes, your emotional swings reduce. You no longer panic on losses. You no longer chase after wins. You're centered. You're grounded. You know your numbers. You know your rules. You know your process. That's what builds durability. Durability is the real edge. Not speed, not IQ, not aggression, but consistency over time. The ability to show up again and again with calm and clarity. While others burn out, you're still here, still focused, still executing. And execution is the only thing you can control. You can't control the market. You can't control news. You can't control volatility. But you can control your plan, your risk, your response. That's where all your energy should go. Not into prediction, but into precision. Because trading is not about being right. It's about being ready. Ready for opportunity. Ready for risk. Ready for failure. Ready for growth. When that readiness meets a solid process, you become not just a trader, but a professional. One who doesn't flinch under pressure. One who doesn't break after losses. One who evolves patiently, purposefully over years. One who understands that mastery is a path, not a destination. And the only way to walk that path is one step, one trade, one decision at a time. As your skills deepen, your thinking begins to shift. You no longer view each trade as an isolated event. Instead, you start to see the whole picture, your trading career as a continuous series of decisions. This broader lens changes everything. It reduces pressure on any single trade, and it reminds you that one moment cannot define your journey. It's like learning to drive. In the beginning, every action feels intense. Every turn, every stop, every signal demands attention. But over time, you internalize the mechanics. You move from reactive to intuitive. That same shift happens in trading. You stop panicking over red candles. You stop celebrating every green tick. You begin to act with purpose, not emotion. You also begin to notice subtle clues. The way price responds at key levels, the timing of volume surges, the quiet before breakouts. You notice when a trend is weakening, when a breakout lacks conviction, when buyers or sellers are showing exhaustion. This deeper market sensitivity doesn't come from reading books. It comes from hours of screen time, focused, deliberate observation. And as you build that familiarity, your edge sharpens. You begin to favor certain types of trades. Perhaps it's breakouts from tight consolidation. Perhaps it's pullbacks to moving averages. Perhaps it's reversals after exhaustion gaps. Whatever it is, your system narrows. You stop chasing everything. You specialize. This specialization is key because depth beats breadth. You don't need to master every pattern or strategy. You need to master the one that fits your mindset, your schedule, your emotional rhythm. And once you do, you can focus all your energy on refining it, tightening your entries, improving your exits, adjusting your risk. This is how traders move from generic to elite, not by doing more, but by doing less with greater precision. And precision demands simplicity. A high probability setup is not a complex equation. It's a clean structure validated by multiple factors: price action, volume, context, and risk profile. Let's talk about context. Context is what gives meaning to every move. A breakout in a vacuum means nothing, but a breakout after days of tight range, or after a news-driven reversal, or after support held multiple times, that means something. High probability traders always ask, what's the context here? Is this move part of a trend continuation or reversal? Is it fueled by retail emotions or institutional pressure? They look beyond the candle. They read the environment. They use higher time frames to guide lower time frame decisions. A 5-minute setup is stronger when it aligns with the hourly or daily trend. Multiple time frame alignment is like a current flowing in your favor. When the current is with you, your edge expands. When it's against you, even good setups may fail. And that's why flexibility is so important. Rigidity kills traders. If you cling to a bias even as the market shifts, you put yourself in danger. Flexibility means letting go of old narratives. It means updating your thesis as new data emerges. The market isn't static, and neither should you be. This doesn't mean you're flip-flopping constantly. It means you're adaptive. You follow your plan, but you reassess when the environment changes. You're firm in your process, but fluid in your interpretations. This balance between structure and flexibility is what makes a trader both safe and agile. Part of that agility comes from managing uncertainty. The market is inherently uncertain, but uncertainty is not the enemy. It's simply the terrain. You don't eliminate uncertainty. You manage it with position sizing, stop placement, and statistical thinking. A trade doesn't need to be a sure thing to be worth taking. It needs to offer favorable odds. It needs to have defined risk. It needs to fit within your system. That's all. If it checks those boxes, you take the trade, not because it's guaranteed to win, but because over time, these setups put you ahead. This is the language of probabilities. You stop saying, this trade has to work. Instead, you say, this is a good bet based on my criteria. This language shift is powerful. It takes the emotional weight off the trade. It reminds you that success is statistical, not personal. And with that, your identity changes. You no longer define yourself by your last trade. You're not a bad trader because of a loss. You're not a genius because of a win. You're a risk manager, a strategist, an executor of process. This mindset builds resilience, and resilience is your foundation. Because no matter how good your system is, you will face setbacks, streaks of losses, periods of doubt, unexpected events. That's why your system needs room to breathe. You don't bet everything on one idea. You don't trade with desperation. You manage risk so that no outcome can derail you completely. And you review, always review. After each session, you ask, what did I do well? What did I miss? What emotions arose? Did I follow my plan? These reviews are where transformation happens. Because the edge isn't just in your strategy, it's in your awareness, in your ability to see yourself clearly and to course correct without ego. That's what separates professionals from amateurs. Amateurs chase perfection. Profissionals caza consistency. Amateurs seek excitement. Profissionals saak stability. Amateurs react to the market. Professionals respond with purpose. And professionals know when to step back, when fatigue clouds judgment, when frustration overrides logic, when the market is choppy and nothing aligns. They pause, they reset, they protect their capital, but more importantly, they protect their mental capital. Because that's what powers everything. Your mental capital is your fuel. When it's high, you make sharp decisions. You see clearly. You act calmly. When it's drained, you make poor trades, chase losses, break rules. So guard fiercely, sleep well, eat right, take breaks, talk to people, live a balanced life outside of trading. Because a healthy life supports a healthy trader. There's no glory in burnout, no prize for screen watching marathons. Trading success is not about hours, it's about intention. Quality over quantity, clarity over hustle. When you trade less but better, everything improves. Your results, your mindset, your sustainability. And sustainability is everything. The market will still be here tomorrow, next month, next year. Your edge will compound if you survive long enough to use it. So protect your ability to stay in the game. That's your true job, not to conquer the market, but to play the game wisely, patiently, and indefinitely. Precision in trading isn't just about finding the perfect entry point. It's about the alignment of your entire approach before, during, and after the trade. A high probability trade begins long before the market moves. It begins in your routine, in the planning you do when nothing is happening, in the clarity you build before you ever press a button. Preparation is your daily advantage. Every morning, you analyze key levels, review the overnight session, and update your plan. You don't just look at where the market is. You consider what could unfold. If price approaches a support zone with weakening momentum, what's your plan? If volatility spikes on unexpected news, how do you respond? These scenarios are not just mental exercises. They're part of training your brain to react calmly under pressure. Because in the heat of the moment, you don't have time to think deeply. You fall back on habits. The better you prepare, the more likely your instincts will serve you well. Once the market opens, your job is not to chase action. It's to wait for structure. You don't dive in because price is moving. You don't act out of fear of missing out. You wait for confirmation. You watch for alignment of trend, of momentum, of structure. You wait for the trade to invite you in. This patience is not passive. It's active. It's a state of focus. You're watching closely, tracking the rhythm, anticipating, but not forcing. When the moment comes, your entry is clean, calculated, executed without second guessing. Because by the time you act, you've already rehearsed the trade in your mind. You size the position correctly. You place the stop where it belongs, not where it feels comfortable, but where it invalidates the trade. And you set your target with intention, not greed. You understand the probable range of the move. You don't try to squeeze every tick. You take what the market gives with discipline, and then you manage. You don't stare at the chart in fear. You don't tighten your stop out of anxiety. You monitor with detachment. You track the behavior. Is volume confirming the move? Is momentum holding? Are there signs of reversal? You manage the trade based on the market, not your hopes or fears. If the trade hits your stop, you accept it. No reentry out of frustration. No doubling down to recover. Just acceptance. You log it, review it, and move on. One trade doesn't define you. It's a brushstroke in the painting. Your job is to keep the strokes clean and consistent. The masterpiece forms over time. If the trade works, you don't get euphoric. You don't suddenly believe you're invincible. You take your profit, breathe, and return in neutral. Emotional spikes, positive or negative, are destabilizing. They lead to impulse, to overconfidence, to sloppiness. High probability traders guard their emotional balance with vigilance. That balance extends to your entire day. You don't overtrade. You don't revenge trade. You know when to step away. You respect your limits, not just financially, but mentally. Because every decision you make consumes focus. And focus is finite. It must be managed like capital. You begin to think in terms of energy management. What time of day are you sharpest? When do you start to fatigue? What kind of losses affect your thinking most? You don't just track your trades, you track your state. You become a student of yourself. Because the more you understand your patterns, the more you can shape them. And this shaping is how professionals evolve. They don't aim for perfection, they aim for better. One more clean trade per week, one fewer emotional lapse per month, one tighter entry per setup. This is the path. Incremental gains repeated over time. That's how small habits become big results. Your journaling becomes more insightful. Your reviews become more specific. Your setups become more defined. Your rules become more precise. Over time, your trading becomes an expression of who you are: disciplined, focused, intentional. But even as you improve, you never let your guard down. You know that the market can humble anyone. The moment you relax your standards, you invite chaos. That's why top traders stay grounded. They don't gloat. They don't chase streaks. They stay in the center, unshaken by wins, unbroken by losses. And they keep learning. Always. Because the market is always changing. A setup that worked flawlessly for 6 months may begin to fail. Not because you changed, but because the participants did. New algorithms, new headlines, new liquidity dynamics. Professionals adapt not by abandoning their edge, but by observing the shift. They ask, has the character of this market changed? Are breakouts failing more often? Are pullbacks deeper? Is volatility compressing or expanding? These questions keep them connected, not just to their strategy, but to the market's personality. And reading that personality, understanding how it behaves in different moods, is what keeps your edge alive. Your goal is not just to trade well today, it's to keep trading well for years. That means building systems around your systems: automation, checklists, rituals, performance reviews, risk controls. All of these serve as scaffolding around your process, keeping it upright, even when your confidence wavers. And your confidence will waver. That's inevitable. You will have losing streaks. You will question yourself. You will wonder if you're cut out for this. In those moments, your process is your anchor. You lean on it. You reduce size. You return to your core setups. You focus on the next clean trade, not the next win. Because that next clean trade resets everything. It reminds you that you're capable, that you're in control, that no matter what the market does, your response is your power. And when you trade from that place, steady, grounded, clear, you begin to rise. Not with fireworks, not with dramatic spikes in your equity curve, but with stability, consistency, quiet strength. You build not just a strategy, but a self that can sustain success. And that self becomes your true edge. What many fail to grasp is that trading doesn't exist in a vacuum. It is not a separate identity you step into only when the market's open. Who you are outside the markets is who you bring into them. Your sleep patterns, your health, your relationships, your stress, they all walk into the trading room with you. And they all affect your judgment. If your life is in chaos, your trades will often reflect that chaos. If you're sleep deprived, your reaction times will slow and your confidence will wobble. If your emotions are tangled from arguments, anxiety, or a lack of direction, your ability to stay calm under pressure will weaken. Trading doesn't demand perfection, it demands alignment. That alignment is built outside the market through rituals, through self care, through discipline in the small things. You begin to understand that managing yourself is not a separate task from managing your trades. It is the foundation of it. You don't meditate or journal or exercise just for wellness. You do it to create a mental environment that supports clarity and consistency when real money is on the line. The best traders live intentionally. They plan their mornings before the charts open. They fuel their bodies with intention. They rest deliberately. They cultivate environments that encourage focus, not just on the screen, but in their home, their routines, their social circles. Every detail is a thread in a larger fabric of performance. Because trading is not just an occupation, it's a performance art. Each session is a stage. You are both athlete and artist, reacting to dynamic conditions, executing precise decisions under uncertainty. And just like any high performer, you must protect your energy. Energy protection isn't just about rest, it's about selective exposure. What you feed your mind matters. Do you spend hours scrolling social media, absorbing noise, distraction, and misinformation? Or do you nourish your brain with quality research, deep rest, thoughtful reflection? Noise is everywhere in this industry. Hot tips, bold predictions, flashy headlines, promises of guaranteed profits. But high probability traders know how to filter. They don't react to opinions, they wait for evidence. They don't follow crowds, they follow structure. Their mind is a calm sea, not stirred by every ripple of news. And when uncertainty spikes, when news breaks, volatility surges, and a market erupts in chaos, they stay grounded. Not by guessing, but by reverting to their process. They reduce size. They wait for clarity. They protect capital. They stay focused on what they can control. Because emotional discipline isn't just for the good days. It's especially for the bad ones. When you're tempted to double down on a loser, when you want to make back what you just lost, when your hands itch to click without reason. This is when your systems matter most. You take a breath. You step back. You ask what's real here. What's noise? What's my rule? And you obey that rule, even when it's painful, especially when it's painful, because that's how trust is built. Not trust in the market, but trust in yourself. Trust in yourself allows you to stay calm through fluctuations. You know that a red trade isn't the end, it's a step. You know that a green streak isn't a free pass, it's a phase. You know that every decision, every click, every exit builds your trading identity. And that identity is more important than any single win. That identity becomes your compass. It keeps you aligned when pressure mounts. It reminds you who you are, a risk manager, not a gambler, a patient executor, not a thrill seeker, a disciplined operator, not a reactive trader. And that difference defines your longevity. Because the goal isn't to win big today, it's to trade well for decades. And that requires more than tactics. It requires rhythm. You start to feel your rhythm over time. The flow of your best hours, your sharpest days, your ideal setups. You notice when your edge is strongest, and you build around that. You design your life to support your edge. Maybe it means trading only mornings. Maybe it means skipping Mondays. Maybe it means taking a walk between sessions to reset your focus. This is not weakness, it's wisdom. You're shaping a life that sustains your best self. And as your life aligns, your trading deepens. Your charts become quieter, your actions more deliberate, your results more consistent. You don't force trades, you attract them. You don't hope for outcomes, you act from clarity. You're not trying to control the market, you're controlling yourself inside it. This internal control spills outward. It changes how you handle wins. You no longer see profit as a trophy. You see as feedback. Did the trade match your plan? Was the entry clean? Was the exit rational? You celebrate execution, not outcome, because that's the only thing you can repeat. And it changes how you handle losses. You stop resisting them. You welcome them as part of the equation. You study them for what they reveal. Was it a good trade that didn't work? Or a broken rule masked as a setup? Losses become your most honest teacher when you're willing to listen. High probability trading isn't about predicting perfectly. It's about preparing consistently. It's not about being fearless. It's about respecting fear without letting it steer the wheel. It's not about trading more. It's about trading right. These subtle distinctions shape your path forward because eventually trading becomes more than numbers. It becomes a mirror. It shows you who you are under stress, how you handle risk, how you handle boredom, how you handle success. It forces you to confront your ego, your impatience, your fears. And in doing so, it offers a rare gift, the chance to grow, not just as a trader, but as a human. In this way, high probability trading becomes a discipline, a craft, a daily practice in humility, focus, and growth. And the better you get, the more you realize the goal was never to beat the market. The goal was to master yourself within it. There's a level of trading where the lines between strategy and psychology blur, where success is no longer about discovering a better setup, but about honoring the one you already have, where the game stops being external and becomes entirely internal. And it's here, in this deeper layer, that high probability traders are truly forged. At this stage, the question isn't, how do I win more? It's, how do I keep trading well no matter what? That question reframes everything, because now you're focused not on outcome, but on execution, not on making money, but on following process. That's where control lives. You begin to recognize that results will always fluctuate. No strategy escapes drawdowns. No trader wins all the time, but process can be constant. Process is the backbone you lean on when everything else is unstable. It tells you when to trade. It tells you when to step back. It reminds you of who you are when emotions try to make you forget. And those emotions, greed, fear, doubt, euphoria, are not enemies. They're signals. If you feel a desperate urge to trade, pause. If you feel unstoppable after a few wins, scale down. If you're hesitant to take a clean setup because of your last loss, reconnect with your journal. The emotional response is never random. It's data. You begin to use your emotions not as guides, but as gauges. A sudden spike in adrenaline? Step back. Shallow breathing before trade? Recenter. You observe your internal state the same way you observe price action, with curiosity, without judgment. And this emotional awareness becomes part of your edge. Because the deeper your awareness, the more space you create between stimulus and response. Instead of reacting automatically, you respond with intention. You become the eye of the storm, calm, focused, stable, while chaos spins around you. That's what allows you to trade clean, even in volatile conditions. Volatility itself becomes a tool. Where others see danger, you see opportunity. If the setup aligns, if the risk is clear, if your sizing is appropriate. You're not chasing the move. You're calculating the moment. Your stop is not just a line, it's your line in the sand. Your target is not just a number. It's a rational outcome based on structure. This is where your relationship with risk matures. You no longer resist risk, you manage it. You don't try to avoid losses, you limit them. You understand that without risk, there's no reward, and that your job isn't to eliminate risk, but to control it so well that it never controls you. Your size reflects your edge, not your ego. You don't size up to make it back. You don't go all in because you feel good today. You follow a scale that is rooted in math, grounded in experience. And if that scale tells you to trade small, you listen without complaint, because you've learned that protecting capital is more important than growing it. Growth comes from compounding clean execution over time. But protection is what gives you the ability to stay in the game long enough to grow. You don't need massive trades. You need good trades again and again. And that means protecting more than just your money. You protect your focus, your clarity, your energy. You don't overextend with endless screen time. You don't let distractions dilute your edge. You guard your trading hours like sacred ground. This is your performance window. You show up sharp. You exit clean. You don't linger. Outside of those hours, you invest in yourself. You rest deeply. You read widely. You reflect honestly. You live a life that nurtures your mental game because you know that trading performance is rooted in life performance. The better you live, the better you trade. You start to optimize everything: your routines, your workspace, your inputs. You declutter not just your charts, but your thoughts. You let go of tools that don't serve you. You simplify your workflow. Every click, every decision, every keystroke is deliberate, minimalist, but powerful. And through that simplicity, you gain speed, not in the frantic sense, but in clarity. You see setups faster. You make decisions with less hesitation. You enter and exit with flow because there's nothing in the way. You've removed the noise, the fluff, the distractions. What remains is the essence, the trader, the plan, the execution. This flow doesn't mean you never slip. It means you recover quickly. You catch yourself sooner. A lapse doesn't spiral. A mistake becomes a moment, not a pattern. You self-correct. You document it. You return to center. That center becomes your home, your mental baseline, a place of neutrality no matter what happens. Green days don't lift you too high. Red days don't pull you too low. You stay in the middle, calm, collected, controlled. And from that middle, you build confidence. Not the kind you shout about, but the quiet kind. The kind that says, I know my edge. I know my rules. I know myself. That confidence is unshakable because it's not based on outcomes. It's based on consistency. Others may ask you, what's your secret? But there is no secret, just thousands of small decisions repeated with discipline, just quiet mornings of preparation, just silent afternoons of observation, just hours of journaling, reviewing, refining. The work no one sees. But that's the difference. The difference between hoping and knowing, between flashes of success and sustained mastery, between burning out and lasting decades. That's what high probability trading really is. Not a system you follow, but a standard you live by. By this point in your trading journey, you've likely come to understand something most never do. That trading isn't about the market, it's about how you behave inside it. The setups may change, the tools may evolve, but what remains constant is you. Your decisions, your routines, your integrity when no one is watching. And it's through the repetition of those routines that your results begin to stabilize. You're no longer surprised by volatility. You're not shaken by drawdowns. You don't jump into trades without confirmation. You don't exit winners prematurely out of fear. You act like a surgeon, steady hands, focused eyes, calm heart. This is the fruit of habit. Not just any habits, but high-performance ones. You wake up with purpose. You prep your levels before the market opens. You walk through your checklist like a pilot before takeoff. You journal after every session, not just what you did, but what you felt. You reflect, improve, and reset. These habits protect you from yourself, from your tendencies, from your emotional triggers, from the chaos of noise and distraction. They give you structure, because in a world of uncertainty, structure is your only shield. And within that structure, you find freedom. The freedom to trade without fear. The freedom to exit a bad trade without shame. The freedom to pause without guilt. Because when you trust your process, you're no longer at the mercy of outcomes. You're anchored to something deeper. That anchoring is what allows you to navigate the storms. Because there will be storms, a sudden reversal, a losing streak, a technical glitch, a global event that throws your plan into question. These are the tests. The moments when weaker traders collapse and stronger traders rise. You rise not by reacting, but by responding. You assess. You stay present. You manage your risk tighter. You trade smaller or not at all. You don't try to fight the storm. You let it pass. You survive. And when it's over, you step back into your flow with the same calm you had before. This resilience is what gives you longevity. And longevity is the ultimate edge. Because anyone can have a good week. Some can even have a good year. But few can perform with consistency for 5, 10, 20 years. That's the true prize. Not a big win, but a sustainable life built around your craft. To get there, you start to think like a strategist. You zoom out. You look at your career the way an investor looks at a portfolio. You ask, how do I stay solvent, sharp, and sane for decades? What habits protect my energy? What risks are worth taking? What lessons must I learn now so I don't pay a higher price later? And so your decisions become more refined. You say no more often. You take fewer trades, but better ones. You're not trying to catch every move. You're trying to protect your edge. You don't care what others are doing. You're not seduced by signals that don't match your strategy. You filter. You focus. You operate. This is where the distinction becomes clear. The amateur trades to feel alive. The professional trades to feel in control. And that control is not about dominating the market. It's about mastering your responses within it. That mastery shows up in small ways. You wait an extra minute for confirmation. You take a breath before clicking. You skip the trade that almost fits but doesn't quite meet your standards. These small moments are invisible victories. They don't show up on your equity curve, but they shape it. Because over time, the market rewards discipline. Not instantly, not every day, but eventually, reliably. It rewards the trader who can wait, who can walk away, who can let a good trade go untraded because the risk was too high. That restraint is strength, and that strength builds confidence. Not the loud kind that boasts, the quiet kind that endures. You no longer need the market to validate you. You no longer need a green P&L to feel worthy. You trade because this is your work, your path, your performance, and you're committed to doing it well. That commitment spills into other areas of life. You find yourself becoming more focused in your goals, more intentional in your time, more aware of your habits, because the same discipline that fuels your trades begins to shape your days. And in that integration, you become more than a trader. You become a craftsman. A craftsman doesn't chase perfection. He seeks excellence. He's never satisfied, but always improving. He hones. He polishes. He studies his mistakes, not with frustration, but fascination. That mindset turns setbacks into data. It turns frustration into fuel. And over time, your trading system becomes a reflection of your internal clarity. Clean charts, clean rules, clean execution. You're not guessing anymore. You're listening to the market, to your intuition, to your journal. Everything speaks if you're willing to hear it. Eventually, the lines blur. Trading is no longer something you do. It's who you are, not in a consuming way, but in a practiced, present way. Every action is a choice. Every choice is aligned with your principles. And every principle has been shaped through challenge, trial, and persistence. That's what makes you dangerous. Not your indicators, but your discipline. Not your speed, but your patience. Not your conviction, but your humility. Because the market respects one thing above all, your ability to stay consistent under pressure. And so, you keep going, one trade at a time, one day at a time, not chasing glory, not avoiding discomfort, just showing up, just doing the work, just honoring the edge. Because that edge is not just on your screen, it's in your choices, your systems, your habits. It's who you've become. There's a rhythm that begins to take shape in the life of a consistent trader. It isn't rushed. It isn't frantic. It's deliberate, intentional, measured. It's the rhythm of someone who's no longer trying to win every day, but trying to win the long game. You wake up and the first thought isn't, how much can I make today? It's, what is the market telling me? That one shift moves you from pressure to presence. It moves you from trying to extract money from the market to understanding how to participate in it wisely. You're no longer looking for trades. You're waiting for your trades. Trades that match your criteria, your structure, your tolerance. Anything outside that zone is ignored, not because it can't make money, but because it doesn't fit your plan. That's discipline. The refusal to chase every opportunity and the commitment to only take high probability ones. You begin to realize that success isn't about activity, it's about selectivity. Your job isn't to trade often, it's to trade well. You don't measure the value of a session by the number of trades taken, but by the quality of your decisions. And some days, the best decision is to sit out. The chart may be unclear, volatility may be erratic, or your mind might not be sharp. You don't force trades because it's 9:30 a.m. You respect the conditions. You respect your state of mind. You let the market come to you. That detachment is not passivity, it's power. Because when your identity is no longer tied to your results, your vision clears. You're not trying to prove yourself with every trade. You're not chasing redemption after a red day. You're simply executing the process you built. And that process has structure. Before the session begins, you've already reviewed your levels. You know what you're looking for. You've checked the calendar. You've reviewed your last trades. You've cleared emotional clutter. By the time the market opens, you are ready. Not hopeful, but prepared. Preparation becomes your superpower. It separates the impulsive from the intentional. When others are still waking up, you're aligned. When volatility spikes, you don't panic. You refer to your plan. When a setup triggers, you're not scrambling. You're executing. The calmness comes from knowing you've already done the work. And after the trade, the work continues. You don't just close the chart and walk away. You journal. Not just the entry and exit, but the why. What did you feel? What did you see? Did you follow your rules? Did you size correctly? What can you do better next time? This journaling is not punishment. It's practice. It's where the real growth happens. The market gives you feedback. Your journal decodes it. And your job is to read that language with humility, to accept the lessons, even when they're uncomfortable, especially when they're uncomfortable, because that's where the real breakthroughs come. Not on the winning days, but on the days you want to give up. The days when doubt creeps in, when frustration whispers that maybe you're not cut out for this. It's in those moments that your habits, your structure, and your mindset carry you forward. You don't escape those feelings. You manage them. You recognize them as part of the path. You've seen enough cycles to know that every high has a low. Every streak has a stop. Every drawdown ends. You no longer ride the emotional roller coaster of your equity curve. You stay grounded. That grounding gives you perspective. You no longer evaluate your performance based on 1 week or even 1 month. You look at the arc, the trajectory, the evolution. You measure growth not just in profits, but in precision, in how closely your actions match your plan. Because that's the game, alignment. When your vision, your system, your rules, and your execution all move together, that's when trading becomes effortless. Not easy, but clear. You know what to do. You know why you're doing it. And you're not looking over your shoulder for validation. You're trading your plan, in your way, on your terms. And that independence is invaluable. It frees you from noise, from chat rooms, from signal services, from the false comfort of crowds. You stop asking, what do others think? And start asking, what do I know? You trust your own data, your own eyes, your own experience. You become the expert of your own system. And that system, over time, becomes lean, streamlined, focused. You cut out indicators you don't use. You simplify your process. You trim the fat. What remains is a tight loop. Observe, execute, review, refine. No fluff, no guesswork, just performance. That loop isn't glamorous. It's not exciting, but it's consistent. It builds a muscle that most traders never develop, the muscle of discipline. And with it, you weather storms others can't. You thrive in silence. You profit in simplicity. Because the secret was never more trades. It was fewer, better trades. The edge was never in prediction. It was in preparation. And success was never about brilliance. It was about endurance. And so, you keep showing up. Each day, each session, each trade, refined by habit, grounded by principle, driven not by the outcome, but by the process itself. Because this isn't just trading anymore. This is who you are becoming. As the days pass and your account grows, not just in size, but in maturity, you begin to appreciate something most overlook. Trading is not just about your capital. It's about your mental capital. And that resource, though intangible, is far more fragile and even more precious. Each decision you make draws from your mental reserves. Each trade taken, each setup skipped, each moment you sit in front of the screen, all of it costs something. Attention, energy, emotional bandwidth. And the great traders don't just manage money. They manage this internal margin with even greater precision. They know when to step away, not because they've hit a loss limit, but because their mental clarity has faded. They know when their edge is dull, not because the strategy is broken, but because their focus is fractured. This is emotional hygiene, the ongoing maintenance of your psychological well-being. You can have a brilliant system and still fail if your emotions are clouding your judgment. But if your mind is sharp, your awareness tuned in, even a basic strategy can be applied with such clarity and patience that it outperforms the most complicated setups run on emotional noise. Mental pacing becomes your quiet ally. You start managing not just how many trades you take, but when you take them. You recognize your rhythms. Perhaps the first hour of the session is where your focus peaks. Maybe after 2 trades, your decision quality drops. These aren't quirks, they're patterns. And once you see them, you can shape your entire approach around them. You structure your schedule with precision. Your screen time is focused, not stretched thin. You give yourself permission to not trade when the market isn't offering what you need. You realize that productivity isn't doing more, it's doing less with greater focus. And in those moments of pause, when the market is quiet or your edge is absent, you don't fidget or force. You observe, you breathe, you reflect. You remind yourself that not trading is still trading. It's the decision to preserve energy, capital, and clarity. You begin to separate the act of being busy from the skill of being effective. Because the former can drain you, even as your account stays flat. But the latter sharpens your edge, especially when it's driven by rest and readiness. Your rules aren't just for when things go wrong. They're also there to protect you when everything's going right. Because success can be just as destabilizing as failure. A string of wins can make you reckless. A surge in equity can tempt you into overconfidence. But high probability traders anchor themselves through both. They don't scale aggressively after a few wins, they stay grounded. They don't feel invincible after a great month. They stick to the same routines. They don't change what's working just because it's working. They understand that sustainability is more important than speed. This maturity also shows up in how they deal with external opinions. You stop comparing your journey to others. You realize the only account that matters is yours. You don't need someone else's chart to validate your view. You don't need confirmation to take a trade. You don't need applause to know you're doing it right. You become self-sufficient. Your journal is your compass. Your process is your feedback. Your data is your guide. You build your confidence from within, not from external validation. This internal confidence is quieter, but stronger. It lasts longer. It survives both winning streaks and losing ones. And when losses come, you meet them differently. Not with panic, but with perspective. You zoom out. You look at the sample size. You ask, was this a mistake in execution or a normal outcome in a game of probability? That distinction is critical because not all losses are bad and not all wins are good. A well-executed losing trade is a win in disguise. It proves your discipline. It reinforces your edge. It reminds you that process matters more than profit. On the other hand, a poorly executed trade that happens to make money, that's a dangerous illusion. If you reward bad behavior with profit, you poison your system from the inside. So you reward integrity. You log every trade, not just for performance, but for behavior. Did I act according to plan? Did I size correctly? Did I exit where I said I would? This becomes the real scoreboard. And the more you track it, the more honest your trading becomes. And in that honesty, you find calm. You no longer argue with the market. You no longer resist the losses. You don't fight reality, you flow with it. The market does what it does. Your job is not to predict it, it's to align with it, to recognize the setups that fit you and ignore the ones that don't. This recognition deepens with time. You develop a kind of sixth sense, not magical, but earned through repetition. You feel when the structure is solid, when momentum is clean, when volume supports the move, when the trade has life. This intuition is not a shortcut. It's a signal that your preparation has soaked into your instincts. And still, even with this edge, you don't rush. You don't force. You wait, because you know that one clean trade is worth more than 10 frantic ones. That patience isn't the lack of action, it's the mastery of timing. And with timing comes rhythm, the daily rhythm, the weekly reflection, the monthly recalibration. You live in cycles. Not every day will be profitable. Not every week will be ideal. But the arc bends in your favor because you stay centered through all of it. This is what professional trading feels like: steady, focused, minimal, unemotional. Not because you've removed feeling, but because you've refined it, transformed it into fuel, into clarity, into wisdom. And so, while others chase the next big move, you're chasing something else: consistency. You're not here for fireworks. You're here for freedom. Not freedom from work, but freedom through discipline, through mastery, through the quiet power of doing what others won't, showing up, showing restraint, and showing growth. Eventually, trading stops feeling like a challenge to conquer and starts feeling like a craft to perfect. The longer you stay in the game, the more you realize that mastery doesn't come from finding more trades. It comes from doing less with greater excellence. You've seen it all by now: the euphoric wins, the draining losses, the boredom, the fear, the impulse to force it when nothing's there, the thrill of nailing a perfect entry, the regret of watching a setup you missed run without you. And through it all, you've come to understand something few ever do: that the outcome of any one trade doesn't matter nearly as much as the way you trade. How you trade, that's your legacy. It's what you bring to the table every day, quietly, even when no one is watching. That commitment to precision, that respect for risk, that refusal to let one moment define you. That's the difference between someone who plays the market and someone who belongs in it. There's no final destination, no ultimate level where you become invincible. There's only refinement, iteration, feedback, adaptation. You're always adjusting, not because you're chasing something, but because you're evolving. This isn't a one-time project, it's a lifelong practice. The longer you stay with it, the more you appreciate how much you've changed. Not just your results, but your habits, your perspective, your emotional range. The same moves that once triggered panic now barely cause a stir. You don't flinch when your trade goes against you. You observe. You don't freeze when you see the setup forming. You act. The mechanics are second nature now. The deeper game is mental, spiritual even. It's about stillness in motion, clarity under pressure, commitment through chaos. You begin to see your system as a living structure, not static, not locked in stone, but something organic, something you tend to. You check it for weakness. You tune it for strength. You adjust the frame, not constantly, but deliberately, because over time, you change, and your system must change with you. Maybe your risk tolerance increases, or maybe your lifestyle shifts. Maybe your vision gets sharper and you notice nuances in price action that once escaped you. Whatever it is, you no longer resist evolution. You invite it. And when you make changes, they come slowly. You test first. You study results. You scale adjustments with caution, not emotion. You don't chase the next big thing. You nurture what already works. You understand that consistency is not something you find. It's something you build, brick by brick, day by day. That construction takes patience. It takes humility. And it takes a deep respect for the fact that no edge lasts forever without care. Even the sharpest blade dulls if left unattended. So you polish yours, not in fear, but in devotion. This is your craft, and you show up for it. You stop looking for confirmation from others. You don't need to announce your wins. You don't need to defend your system. You don't even need to prove anything to yourself anymore. You've already proven it, not with one trade, but with hundreds, with the fact that you're still here, still calm, still present, still accountable. That accountability is rare. Most traders run from it. They blame the market, the news, the broker, the indicator, but not you. You own your trades, every last one. You own your process. You own your mind. And in doing so, you own your results fully. It's this full ownership that sets you apart. It keeps you grounded. You're not a victim of volatility. You're not a passenger in someone else's narrative. You are the one making the decisions. You are the one placing the risk. You are the one closing the trade. And you know what to do when it doesn't work. You know when to take the loss, reset, and come back stronger. You know how to zoom out when doubt creeps in. You know that one trade, good or bad, is just a data point. What matters is the series, the structure, the consistency. You also start to feel how deeply trading mirrors life. It teaches you the same lessons, just faster. That control is an illusion. That outcomes can't be forced. That uncertainty is a given. That patience is a weapon. That ego is the enemy. That the only real success is the kind that doesn't need to shout. In many ways, your trading becomes a meditation, a daily practice and observation, intention, action, reflection. Not because it's easy, but because it's real. The charts don't lie. The market doesn't flatter. It responds only to structure, to patience, to preparation. So that's what you give it. You show up prepared. You wait for your edge. You take the trade when it's there. You protect capital when it isn't. And no matter what happens, you return to your journal, your systems, your self-awareness. This is not a job anymore. It's not a hustle. It's a way of seeing, a way of acting, a way of being. And the better you get, the quieter it becomes. You don't need noise. You don't need excitement. You don't need chaos to feel alive. You've outgrown all that. What you crave now is precision, consistency, peace. And peace in trading comes not from certainty, but from alignment. From knowing that your actions match your beliefs. Your process matches your risk. Your system matches your temperament. That you're not trying to trade like someone else, but like yourself at your best. And when that alignment is in place, when your plan, your tools, your timing, your mindset are all moving as one, you don't have to chase success. It finds you. Discipline is often misunderstood. People think of it as restriction, as something that takes away freedom. But in trading, discipline is not a cage, it's a doorway. It doesn't limit your possibilities, it protects them. It keeps you from destroying your own potential before it matures. Discipline is what keeps your equity curve from swinging like a roller coaster. It's what stops one bad trade from becoming a catastrophe. It's the reason you can survive long enough to see your edge play out over time. Without it, even the best strategy becomes useless. But with it, even a simple plan can become powerful. The truth is, your system is only as good as your ability to follow it. Your rules are only as strong as your willingness to enforce them. Every time you override your stop, chase a setup out of FOMO, or double your size out of revenge, you don't just break a rule, you weaken your identity as a disciplined trader. Each act of discipline reinforces the opposite. When you stop out exactly where you said you would, you prove to yourself that you're in control. When you skip a trade because it's not clean enough, you build trust with yourself. When you take profits according to plan instead of emotion, you anchor your edge. These moments may feel small, invisible even, but they compound. Every rule followed is a brick laid in the foundation of your career. And over time, that foundation becomes unshakable. You don't have to hype yourself up to do the right thing. You are the right thing. And this identity isn't something you fake. It's built slowly, repetitively, through the ordinary work, the checklists, the journaling, the screen time, the reviews. You become who you need to be through the habits you uphold when no one is watching. That's why discipline isn't a feeling. It's a decision, a posture, a standard, and you don't wait to feel like being disciplined. You decide that no matter how you feel, you'll act in alignment. That alignment is what gives you peace of mind, even when the trade loses. Because you know it was a good trade, not by the result, but by the execution. You followed your edge. You respected your risk. You played your part. That's how real traders sleep at night. Not because they always win, but because they trust their behavior. And when discipline becomes a habit, trading feels different. The anxiety softens. The confusion fades. You're not swinging wildly from trade to trade. You're pacing yourself, managing yourself, keeping your focus in the right place. You begin to understand that your true job is not to predict the market, it's to protect your decision making ability, to stay mentally sharp, emotionally steady, and behaviorally consistent. Every choice you make either strengthens that or weakens it. You take breaks on purpose now, not because you're tired, but because you value your mind. You step away from the screen, not to escape, but to reset. You understand that every ounce of focus you burn must be restored. If not today, then tomorrow. And you build your life to support that restoration. This is when trading becomes part of a larger system, not just a charting routine, but a full performance ecosystem. Your sleep, your food, your movement, your relationships, each of them influences your trades. You start adjusting your lifestyle like you adjust your entries, carefully, purposefully, and slowly you stop chasing balance. You become balance. You move through your day with more calm, more clarity. You're no longer trying to make it by force. You've realized that high performance comes from stillness, not stress. And in that stillness, you start to notice new things, not just on the charts, but within yourself. You catch impatience before it becomes action. You feel hesitation before it becomes avoidance. You sense fatigue before it distorts your judgment. You've tuned into your internal state so closely that your self awareness becomes a second edge. This awareness helps you shift before breakdowns occur. Instead of reacting, you adapt. You don't wait until you blow up to tighten risk. You don't wait until you feel burnout to rest. You make small adjustments early because you're listening every day. And when the time comes to execute, you're ready. Not emotionally hyped, not afraid, just ready, focused, clear, still. The trade comes and you take it. No drama, no second guessing. You execute and then you manage. And when the trade is over, win or loss, you reset. You take notes. You breathe. You prepare again. Because trading is not an event, it's a rhythm, a cycle of decisions, and each one deserves your full attention. Over time, your process becomes so embedded in your identity that breaking your rules feels unnatural. Not because you fear punishment, but because you value your alignment. You know what breaking your system costs, not just in money, but in clarity, in confidence, in rhythm. So you protect your rhythm because your rhythm is what brings you profits. It's what keeps you grounded. It's what allows your system to flourish. And more importantly, it's what keeps you sane. Discipline isn't just about avoiding mistakes. It's about preserving your edge in the deepest sense. Your emotional edge, your mental edge, your behavioral edge. That's what high probability trading is really about. Not flashy wins, not perfect entries, but a quiet, consistent alignment between your process and yourself. There's a moment in every trader's evolution when they stop asking, will this trade work? And start asking, does this trade make sense in the context of my edge? That moment marks the transition from emotional speculation to probability based thinking. And it's a shift that changes everything. Because most traders come to the market looking for certainty. They want green lights, they want guarantees, they want someone or something to tell them it's safe. But markets don't offer safety, they offer opportunity. And opportunity always walks hand in hand with risk. The great traders don't try to avoid uncertainty. They learn how to price it, how to contain it, how to operate within it. That's what probability thinking really means. You don't need to know what will happen. You only need to know that over time, this kind of setup, under these conditions, with this risk structure, produces a favorable outcome more often than not. So instead of trying to be right, you focus on being consistent. You define your edge. You protect it with risk controls. You apply it only when conditions align. And then you let the law of large numbers do the heavy lifting. You learn to zoom out. One trade is just a dot. 1 week, a short line. But a year? A decade? That's the full picture. And that picture is shaped not by how often you were right, but by how well you manage your risk how cleanly you executed your edge, and how faithfully you followed your process. When you think in probabilities, your language changes. You stop saying, I knew it was going to break out, and start saying it was a valid setup that didn't follow through. You stop attaching your identity to outcomes. You stop letting one trade decide how you feel about your ability. That emotional detachment creates strength. It doesn't mean you don't care. It means you care about the right things. You don't measure success by wins and losses, but by how many times you honored your rules. You don't react to P&L swings. You respond to the integrity of your process. That's what gives you true control, not over the market, but over yourself. And that self-control allows you to hold two conflicting truths at once. This trade might lose, but still the right trade to take. You stop trying to eliminate losses from your system. Instead, you plan for them. You bake them in. You understand that losses are not interruptions. They're part of the math. Once you embrace this, something incredible happens. Fear begins to fade. Not because losses stop hurting, but because they stop surprising you. You don't flinch when a trade doesn't work. You already knew the risk. You already planned the exit. You already accepted the cost. You stop chasing trades to avoid discomfort. You stop exiting early just to feel safe. You stop hesitating out of fear of being wrong. You start acting with clarity because you've internalized a deeper truth. You don't need to be right to win. You just need to follow your edge, protect your capital, and stay in the game long enough for your probability to express itself. That's how trading becomes sustainable. That's how confidence is built, not by perfect results, but by predictable behavior. And predictable behavior is what makes your system measurable. If you follow the same rules, under the same conditions, you can analyze your performance objectively. You can make adjustments from data, not emotion. You can improve not by guessing, but by refining what you already do. This is how professionals evolve, not by looking for magic systems, but by running their own system like a business, tracking inputs, measuring outputs, studying patterns, making tiny tweaks that compound over time. They run lean. They cut inefficiencies. They stop overtrading. They stop forcing setups in low probability conditions. They become masters of restraint because they know the fewer the variables, the cleaner the data. And the cleaner the data, the clearer the next improvement. You begin to optimize for clarity, not complexity, not excitement, just clean, repeatable setups that fit within a defined risk framework. That's what separates a pro from a hopeful speculator. The ability to say no to everything that's not your edge. And that no is your real edge. That filter, that discipline, that patience. You also stop romanticizing trades. You don't need every move to be the big one. You stop holding for home runs out of greed. You take what the setup gives. You scale out. You lock in gains when the chart tells you momentum is shifting. You trail stops with structure, not impulse. You think like a chess player. Every move is part of sequence. Every sequence is part of strategy. You don't get attached to individual pieces. You sacrifice when needed. You retreat when the position weakens. Because you're playing a game of probability, not of ego. And in this game, your real currency isn't your balance. It's your behavioral consistency. That's the measure of edge. That's what you control. That's what you optimize. So when others spiral from frustration, you breathe. When they overtrade to recover, you review. When they panic out of boredom, you journal. Because you understand something they don't. The game isn't outside of you, it's within you. And the more you master that inner game, the more the outer one begins to bend in your favor. In the world of high probability trading, it's not just what you do, it's how and when you do it that determines your outcome. Great trades don't happen in isolation. They emerge from a trader whose internal state is aligned with the external opportunity. This is why elite traders don't just have setups, they have structure. They build frameworks around their process, their energy, their time, and their attention. They don't rely on willpower alone. They engineer their environment so that discipline becomes the default, not the exception. It starts with how the trading day is designed. Every successful trader has a pre-market routine. It's not complicated, but it's sacred. It might include reviewing yesterday's trades, checking economic calendars, identifying support and resistance, and mentally rehearsing potential scenarios. This routine isn't just preparation, it's psychological anchoring. It quiets your mind. It brings you into focus. It transitions you from everyday life into the domain of deliberate, strategic action. By the time the market opens, you're not reacting, you're ready. You're not scrambling to find trades. You've already decided which setups are worth your attention. If you treat the market like a fixed machine, your strategy will eventually fall behind. That's why one of the greatest skills you can develop is adaptability. Adaptability doesn't mean chasing every new trend or abandoning your system every time a losing streak appears. It means learning how to listen to the market, to sense when the personality of the environment is different than before, and to adjust how you apply your edge. Sometimes that means trading less. Sometimes it means switching to a higher time frame. Sometimes it means skipping breakout trades in a choppy market. Other times, it means tightening your stop loss or widening your targets because of increased volatility. But the point is this: you're observing, you're responding, you're staying aligned with reality, not fantasy. You're not demanding that the market conform to your rules. You're making sure your rules are flexible enough to evolve within the changing terrain. And this flexibility is rooted in data, not emotion. You notice over the past month that your breakout strategy is producing more false signals. Instead of blaming the setup, you ask, what's changed? Has volume dried up? Has follow through weakened? Is the broader trend range bound? You adapt. You either pause that strategy temporarily, lower your risk, or shift to a setup that works better in current conditions. Because as a high probability trader, your priority is not to be right, it's to be aligned. Alignment is everything. It's what separates stubbornness from consistency. You can follow your system with total discipline and still lose money if the market environment has changed and you haven't. That's why you don't just review trades. You review conditions. What kind of market was this? Trending or ranging? Strong internals or mixed? What was volatility like? Were news headlines driving behavior, or was it technical structure? These meta-observations give you insight into how your edge interacts with different types of markets. You begin to know when to press and when to protect, when to be aggressive and when to be patient. And this timing becomes a second edge, just as powerful as any entry trigger or indicator. You also get better at recognizing when you're out of sync. Maybe nothing seems to be working. You're missing entries. You're holding too long. You're second guessing everything. In those moments, the temptation is to push harder, to trade more, to prove something. But the seasoned trader knows better. They pause. They reduce size. They step away. They go back to basics. Not out of fear, but out of respect. Respect for the fact that sometimes the best thing you can do is reset. Let the noise clear. Let your mind recalibrate. Because high probability trading isn't just about trading well when things are going your way. It's about managing yourself when they aren't. It's about how you respond to uncertainty, to drawdowns, to stagnation. That response is where true consistency is built. And it's in those quiet pauses, those resets, that your best insights often emerge. You realize a rule needs adjusting, a setup needs tightening, a risk parameter needs refining. And because you took the time to step back, to breathe, to listen, you're able to make smart, measured decisions instead of reactive ones. That's the mark of maturity. You're no longer scrambling for the next hot setup. You're not constantly changing your strategy every time something goes wrong. You're refining what already works. You're adapting, not reacting, improving, not chasing. And perhaps most importantly, you're letting go of the need to force the market to perform on your schedule. You've accepted that sometimes the best trade is no trade at all. You've learned to honor the slow days, the low volume days, the confusing days, not as wasted time, but as part of the ecosystem. You can't grow fruit every day. Sometimes you plant, sometimes you harvest, sometimes you just wait. But in all seasons, you remain present, aware, ready, because trading success doesn't come from knowing what the market will do next. It comes from knowing what you'll do next, no matter what the market does. And that confidence, that sense of readiness, comes from preparation, process, and the quiet strength of someone who has seen many markets come and go and still shows up adaptable, disciplined, and clear. Every trader, no matter how experienced, eventually encounters the slow seasons, the periods of stagnation, the weeks when the setups don't appear, or the ones that don't follow through, the drawdowns that stretch longer than expected, the confidence that quietly erodes after several small losses in a row. These are the moments that test more than your strategy. They test your faith, your patience, your identity, and how you navigate these plateaus will often define the longevity of your trading career more than your winning streaks ever will. Because it's easy to feel powerful when everything is working, when you're hitting your targets, when the setups are clean, when the execution flows. But trading isn't about what you do when it's easy. It's about how you carry yourself when it gets quiet, or messy, or uncertain. In these moments, the undisciplined trader starts grasping. They take trades that aren't part of the plan. They increase size to make back what they've lost. They chase volatility, news, or any price movement that looks like hope. But all of that is noise. It's emotional scrambling. And it always ends the same way: drawdowns deepened and confidence cracked. The high probability trader does something very different. They pause. They observe. They tighten up. They don't panic just because the edge is underperforming. They don't abandon the plan out of frustration. They zoom out and they remind themselves this is part of the cycle, because everything in trading is cyclical. Your edge will have periods of brilliance, followed by flat zones. Markets will go from trending to choppy. Conditions will shift, and your job is not to control the cycle, but to navigate it without losing your structure. You do this by recentering on the basics, rereading your journal, looking at what worked during your best periods, reviewing what you did right, not just what you did wrong. Sometimes the best recovery doesn't come from doing something new. It comes from remembering what already worked. You also reduce pressure. You scale down your size, not to avoid the market, but to preserve mental clarity. When your confidence feels brittle, you don't need big wins. You need small wins, clean execution, simple trades, a few sessions where everything goes to plan. Because confidence is rebuilt through behavior, not through outcomes. You can't trade your way out of doubt by chasing wins. You regain your footing by proving to yourself again and again that you can follow your process no matter how you feel. And that quiet proof, layered over time, brings your composure back. You also stay anchored to what you can control: the number of trades you take, the setups you choose, the size of your positions, the placement of your stops, the quality of your preparation. These are not small things. They are everything. They are what tether you when the emotional tide rises. And the more consistently you control what's yours to control, the less you're affected by what isn't. You remind yourself that a losing streak doesn't define you. It's just a statistical event, part of the cost of doing business, not a judgment on your intelligence, your talent, or your potential. And when you see it for what it is, you can respond with objectivity, not self-criticism. This is what separates the temporary traders from the lifelong ones. The professionals don't crumble because of a bad month. They've seen enough to know it happens. They've built systems, habits, and mental frameworks that absorb those moments without breaking. And in doing so, they emerge stronger, sharper, more refined, because drawdowns, handled well, become periods of reinvention. They give you a reason to re-examine your risk metrics, to tighten your process, to reconnect with your emotional discipline, to discover weak spots you couldn't see when everything was green. Setbacks become the soil in which new resilience grows if you stay open, curious, and consistent. So you show up, even when you don't feel like it, even when your P&L is quiet, even when your edge is resting. You still show up. You follow your morning prep. You review your rules. You track your emotional state. You stay engaged but detached, active but neutral, and eventually the cycle turns. The edge comes back. The market shifts. The momentum returns. And because you stayed grounded, because you didn't self-destruct, you're still standing. You're still sharp. You're still ready. You didn't rush it. You didn't force it. You simply endured it with structure, clarity, and grace. And that's what high probability trading is about. Not dominance, not perfection, but presence. The presence to keep showing up. The presence to trade what's real, not what you wish. The presence to trust your edge, even in the quiet times. There comes a moment in your journey where you no longer need to be in every trade. You're not chasing the market. You're not glued to every tick, every candle, every chatter-filled forum. You've crossed a threshold where most traders stop: the need to always be doing something. Because you've learned something most never do. The best trades are the ones that don't force themselves onto your screen. They earn their way into your attention. They meet criteria. They align with probability. They check every box. And until they do, they're not worth your time. This is the quiet luxury of high probability trading, where you reflect honestly on what you did well and what didn't go according to plan. You write it down. You talk it through out loud if needed. When you can look at your strengths and weaknesses without flinching, you become more powerful. This makes it easier to plan your improvement. No excuses, just clear reflection. You must also be willing to make friends with your weaknesses. This means seeing patterns of fear, impatience, or overconfidence and choosing not to ignore them. You don't pretend they're not there. You treat them as signals. When you can calmly accept what's not working, you gain the ability to shape into something better. It's not about forcing change. It's about working with what's real. Sometimes progress means changing your environment. You don't always need willpower. You need better conditions. If you find that trading from a certain place or at a certain time leads to poor results, you consider adjusting it. You shape the space around you to support your discipline and focus. You remove the clutter. You adjust your schedule. Even a small shift in environment can unlock new clarity. Your emotional state matters too. When you catch yourself getting frustrated or overwhelmed, you don't let it snowball. Instead, you break the trance. You step away. You breathe. You reconnect with the moment. A calm mind sees clearly. An active mind makes better decisions. You train yourself to recognize when your internal state is shifting so you can guide it back to balance. To guide your improvement, you begin with small, specific goals. You don't try to fix everything at once. You look at one aspect of your trading that you can track and work on. Maybe it's sticking to stop loss levels. Maybe it's waiting for confirmation. You write down what you're working on. You review your performance each day. Over time, those small improvements compound into real change. Another tool is creating a tracking system. You don't rely on memory. You record your trades, your thoughts, your emotional reactions. The more you track, the more patterns you see. And once you see those patterns, you can begin to change them. You coach yourself by using real data, not just hunches. You build a structure of accountability. You don't keep your goals to yourself. You find a way to stay responsible, whether that's writing in a journal, checking in with another trader, or reviewing your process at the end of each day. The goal is not to be perfect. The goal is to stay consistent. Even a short daily review helps you stay connected to your growth. Finally, you remind yourself that the most important part of progress is persistence. Confidence comes not from winning every trade, but from staying committed to your own development. Even when you stumble, even when a trade goes wrong, you stay with the process. You reflect. You adjust. You try again. Over time, you stop fearing failure because you know how to learn from it. You become your own guide, your own support system, and your own motivator. This is how your journey begins, with awareness, small goals, daily tracking, and emotional clarity. Each lesson is like a building block. You take one, practice it, and then build on the next. This is where you start, not with perfection, but with presence. With that foundation, the path ahead begins to open. And now, let's move forward to the next set of lessons. Chapter 2: Stress and Distress. Creative coping for traders. Stress is not always the enemy. It becomes a problem only when it turns into distress, when it overwhelms and controls your decisions. But used the right way, stress can serve you. It can sharpen your focus and boost your performance. The key is learning how to manage and channel it. Start by becoming more aware of what situations trigger stress. Think back to recent trades. What happened right before you felt that tension rise in your body or your thoughts start racing? Identifying your personal stress signals is the first step to gaining control. This awareness allows you to interrupt the pattern before it gains momentum. Writing your thoughts down in real time is one of the most powerful ways to do this. When you're feeling that internal pressure build, pause and write exactly what you're thinking. Don't worry about structure or grammar. Just get the raw thoughts out. What you're doing is capturing the stress before it snowballs into overreaction. You'll often find that simply seeing your thoughts written down removes their power. Now, consider the kinds of questions you're asking yourself during a trade. Are they helpful or harmful? Questions like, why am I so stupid? Only deepen frustration. Better questions move you toward solutions, such as what can I learn from this trade? Or what did I miss in my preparation? Your internal language guides your behavior. Shifting the way you talk to yourself is one of the quickest ways to shift your results. Sometimes, though, the pressure isn't just about one trade or one day. It builds over time. This is where fatigue enters. You might be trading too much, analyzing charts too long, or sleeping too little. Fatigue changes the way your mind processes information. That's when small mistakes start to creep in and multiply. Recognizing when you're tired, not just physically but mentally, is key to recovery. You must give yourself permission to step away from the screen and rest. Another thing to notice is how your mood outside of trading affects your decisions inside the market. If you start a trading day angry, anxious, or distracted, that emotion doesn't magically disappear. It leaks into your strategy, your patience, your timing. That's why it's important to create a routine that helps you check in with yourself before you ever take a position. A few quiet moments of breathing, journaling, or stretching can create enough space between your life and your trades to keep you sharp. When a trade moves against you, your first instinct might be to panic or double down. But neither response is helpful. What you need is a way to pause the cycle. One technique that works is stepping away for even 5 minutes, changing your environment. Go outside, walk around, breathe deeply. Shifting your physical state helps reset your mental state. It's not about escape, it's about clarity. There will be days when fear is strong, when you hesitate to pull the trigger on a setup, not because the trade is wrong, but because you've been burned recently. This is natural, but must be faced. The best approach is to reduce your position size during recovery periods. Trade smaller. Focus on execution instead of outcome. Build back your confidence through repetition and consistency. Sometimes what looks like stress is really boredom in disguise. If you're sitting at the desk all day watching charts that aren't moving, you can start to create trades just to feel something. This leads to overtrading. That's why it's crucial to define not just your entry and exit strategy, but your non-trading conditions too. Know when not to trade. Know when to walk away. Mental rehearsal can also become a powerful practice. Before the market opens, close your eyes and walk yourself through how you want to perform. How you will respond if the trade moves in your favor. How you will respond if it doesn't. This kind of visualization trains your brain to remain calm and follow the plan. Lastly, remember that tracking your stress is just as important as tracking your trades. Use your journal not just to note profits and losses, but to log your emotional state, sleep patterns, mood shifts, and reactions. Over time, you will start to notice patterns. You will see that the biggest risks often come not from the market, but from how you show up to the market. Managing stress isn't about eliminating it, it's about using it. When you can channel pressure into preparation, fear into focus, and fatigue into rest, you stop reacting to the market and start responding with control. Chapter 3: Psychological Well Being, Enhancing Trading Experience. Close your eyes and picture your trading desk, not as a place of pressure, but as a space for focus, energy, and clear decision making. What if this experience could feel purposeful instead of chaotic? The journey begins with how you shape your internal environment. It starts by choosing what you fill your mind and body with before you even look at the markets. The first step is to begin your trading day with intention. When you wake up and prepare for the markets, include practices that bring alertness and clarity. This might be a quick walk, a short breathing routine, or reviewing a few notes from previous trades. You don't need to spend hours, but just a few minutes spent resetting your mind can help you step into the markets with strength and attention. Once the day has started, your mindset continues to shape your actions. You can train yourself to focus on the parts of trading that give you energy. For example, you might find that building a trade idea, studying price behavior, or watching how patterns develop is what makes the work feel alive. When you lean into these activities, even small wins feel satisfying. Recognizing what energizes you helps you stay connected to the process and improves how you show up every day. As you sit in front of your screen, your ability to concentrate becomes a powerful asset. When you're fully focused, your actions become sharper, your decisions more deliberate. But this kind of focus doesn't just happen, it needs to be built. One way to do this is by setting time aside for total immersion in your work. Create time blocks when all distractions are removed. In those quiet moments, you strengthen your ability to see clearly and act precisely. Trading isn't just about action, it's also about recovery. How you restore your energy determines how long you can remain effective. That's why it's important to step away from the screen throughout the day. Walk, stretch, close your eyes, rest your mind. When you return, your screen will still be there, but your focus will be sharper and your response will be stronger. Along with rest comes play. Too often, traders build their lives around the screen and forget to balance work with activities that bring joy or lightness. When you take time to engage in playful or creative moments away from trading, it resets your internal rhythm. It reminds you that life is broader than any single trade. And from that bigger space, it's easier to manage risk, avoid revenge trades, and keep your edge. When you build your trading routine with care, you also reinforce your values. One of the strongest values to hold close is integrity. Every time you stick to your plan, follow your rules, and take full ownership of your results, you are strengthening your inner foundation. You begin to trust yourself more. This trust becomes a structure that supports you, especially when markets become uncertain or volatile. At times, the best thing you can do is develop your ability to step back and reflect. Take time regularly to review your behavior, not just the trades, but how you manage your energy, your reactions, and your process. Writing down what worked and what didn't allows you to capture lessons and bring more awareness to your work. These quiet reviews are where much of the growth happens. One of the key abilities is learning how to face challenges with a solution mindset. That means when you feel stuck, you don't retreat. You look for what you can do, even if it's a small shift. Maybe it's changing your entry criteria, adjusting your risk level, or using a different method for preparation. That mindset of constant improvement turns struggle into progress and makes you more adaptable with each session. Finally, cultivating confidence doesn't come from pretending everything is okay. It comes from doing the work consistently and seeing your skills improve over time. When you can look back and notice that you've stayed focused, stayed accountable, and made small improvements each week, confidence becomes something real, not just a feeling, but a belief supported by experience. Trading becomes a much richer and more stable experience when you operate from a space of balance, clarity, and focus. The more you take care of your mind and body, the more you will notice your screen reflecting it back. With structure, self-care, and awareness, every day in the market becomes a moment of growth, not just for your account, but for your ability to stay sharp, steady, and strong. Chapter 4: Steps Towards Self-Improvement, the Coaching Process. Let's walk into the quiet workroom of your trading mind, where real improvement begins, not with motivation, but with daily structure and attention to detail. In this space, the tools of self-improvement are practical, direct, and ready to be used. The first step is to keep a consistent journal. This journal is not just for writing what trades you took. It's for recording thoughts, plans, patterns, and results. It helps you see what's working and what needs fixing. When you see the same problems repeating, you start to understand they're not just random. They're signals that something deeper needs adjustment. To start improving, you need to become a
Getting mated out of the opening
before trying
happens to
change
everyone.
anything.
With some opening
you
review,
observe how
we can
things really are. You record how you respond to wins, to losses, to boredom, to fear. You make notes after trades, not only about the market, but about your decisions. Over time, the journal becomes a mirror, not one to judge you, but one to reflect the truth you might miss in the heat of the moment. Setting goals is the next important step. But these aren't just big, vague goals like become profitable or make more money. These goals are specific and behavioral. They must be things you can do today, things you can measure. For example, instead of saying stay disciplined, you say, I will wait for my setup and take no impulsive trades. That goal is clear. You'll know by the end of the day if you followed it or not. Once you have a goal, break it into small actions. Practice that action during the day. Review it at night. Write down what went well and what didn't. Make adjustments. Then try again the next day. This builds a coaching loop. Identify, plan, act, review, adjust. Over and over. Improvement doesn't come from thinking about trading. It comes from doing something with your process every single day. One of the most powerful ways to support that process is by creating structure in your trading day. That structure might include a pre-market routine, a checklist before entering any trade, and a review session after the market closes. These routines don't have to take long, but they act like anchors, keeping you steady and consistent. Without structure, it's easy to drift. And drifting is when mistakes happen. It's also important to define your trading rules clearly. These rules guide you. They protect you. They're not suggestions. They are boundaries. For example, you might have a rule that says, I never enter a trade unless I've checked 3 confirming signals. Or, I cut the trade if the loss reaches a certain level. These rules must be written down. They must be followed with discipline. When you break a rule, don't ignore it. Record it. Figure out why. Use that information to get better. There will be times when you want to give up on a rule or a goal because it feels hard or boring. That's when coaching yourself matters most. You remind yourself why this work is important. You don't wait to feel motivated. You just follow the process. You keep the structure. You keep the journal. You review your actions. and you make changes only when they are based on data and experience, not emotions. Another powerful approach is mental rehearsal. Before your trading day begins, imagine the setups you're looking for. Visualize how you will respond if the trade goes your way, and how you will respond if it doesn't. Practice those reactions in your mind. Rehearse cutting the loss with no hesitation. Rehearse trailing a winner with calm focus. This kind of rehearsal prepares your mind. It helps make your actions more automatic and less emotional during real trading. It's also helpful to look back and study your biggest mistakes. Find the patterns in those errors. Were they caused by rushing, by fear, by overconfidence? Once you see the pattern, create a new response to that situation. Practice it, write it down, plan for it. Over time, you begin to replace bad patterns with better ones, not by forcing them out, but by giving yourself better tools to use when stress appears. Consistency is key. You won't change everything overnight, but each day, you can do one small thing to move forward. You can log your trades. You can follow your rules. You can review your actions. You can prepare mentally. Each small action adds up. This is what self-coaching really means. It's not about being perfect. It's about showing up every day and doing the work. The most successful traders are not the ones with the best strategies. They're the ones who consistently follow their process, even when it's hard. They treat each day as a chance to learn something new about themselves. They use every gain and every mistake as information. They don't hide from the truth, they work with it. In this way, improvement becomes part of your routine. It's not a separate goal. Chapter 5: Breaking Old Patterns, Psychodynamic Frameworks, Lessons 41 to 50. To truly change trading behavior, it's important to understand how old emotional patterns influence decisions. The first step in this process is identifying the emotional imprint from the past that continue to show up in present behavior. When a trader reacts strongly to certain situations, like taking impulsive trades after a loss, it may not always be because of the market. It could be tied to earlier life experiences, especially those involving failure, criticism, or pressure. Recognizing these patterns starts by paying close attention to repeated responses that feel automatic and often out of proportion. It helps to step back and observe what triggers a strong emotional response. Whether it's anger, fear, or overconfidence, those feelings can be clues. By observing them closely and writing them down, it's possible to see how these reactions follow a similar path each time. Maybe a specific type of loss makes one feel like a failure, not just in trading, but as a person. This is not a trading issue. It's a deeply rooted belief issue. Bringing these beliefs into the open allows them to be explored. When one realizes that certain reactions are based more on past experiences than on the current moment, it becomes easier to separate the two. The awareness alone creates space. It gives room to make different decisions, to respond rather than react. This doesn't require deep therapy. It starts by simply noticing, questioning, and reflecting. There's a useful exercise for this. After a trading session, recall a moment that brought out a strong emotional reaction. Then ask, what did that moment remind me of? Have I felt the same way before? Outside of trading? What was the earliest time in life I remember feeling this exact emotion? Doing this allows the trader to trace today's reactions back to their origin. Understanding transference plays a key role here. Transference happens when a trader projects feelings from one relationship or event onto something else, like the market. For example, a trader who grew up being harshly judged might feel that every market move is judging their worth. They may take a stop loss personally, as if it's a direct comment on their value. But the market is neutral. It doesn't care. When one can see this, emotional reactions start to lose their grip. Another important concept is defensive behavior. Traders often develop defense mechanisms to avoid emotional pain. Overtrading might be a way to avoid feeling helpless. Refusing to take a break after a bad loss could be a defense against shame. But the very things used to protect oneself often cause more harm in the long run. These defenses can be softened, but only after they're made conscious. Taking the time to write down these repeated emotional responses and the situations that trigger them is like drawing a map of the trader's internal world. Patterns start to appear. From those patterns, it's easier to anticipate future problems and plan for them in advance. For example, if overconfidence usually follows a big win, there could be a rule in place. Reduce position size after a strong day. This isn't a punishment. It's a strategy based on real self-knowledge. There's also value in giving each inner voice a name or identity. Maybe the harsh critic inside is called the judge. Maybe the anxious, second-guessing voice is the doubter. Naming them makes it easier to recognize when they take over and to respond with calm. It creates distance. That distance allows choice. Visual techniques also work well. A trader might visualize handing control back to their calmer, wiser self before starting a session. Or they might imagine placing their fear outside the trading room. These practices sound simple, but they train the mind to respond differently over time. Replacing old patterns with new ones requires repetition. It's not about forcing change, it's about practicing new responses again and again until they become natural. Each time an old reaction is paused, examined, and adjusted, the trader rewires their mind. Finally, reflection is key. Looking back each week, reviewing not just trades, but emotional responses and decision-making patterns, allows the trader to track progress. Small wins count. Not reacting in the same way to a losing streak, staying calm during a reversal. These are signs that old patterns are losing power. Transformation doesn't come from pushing harder. It comes from seeing more clearly. Once a trader sees where their responses come from, they're no longer trapped by them. They are free to respond with awareness, not habit. And in that awareness lies real control. Chapter 6: Remapping the Mind, Cognitive Approaches. When trading, our thoughts guide our actions, and our actions shape our results. But sometimes, our thoughts are misleading or unhelpful. So, we begin by understanding how thinking patterns affect performance. The first practice is mapping those patterns, looking closely at how certain beliefs and expectations arise in real time, especially during trading. If you catch yourself saying, "I always mess up," or "this market is out to get me," you start writing these thoughts down. Don't judge them, just collect them. You're building a mental map of the way your mind reacts under pressure. Now, once those thoughts are clearly seen, the next step is to test them. You treat your beliefs like working theories, not facts. You ask, is this really true? Do I have evidence for this? Is there a more accurate way to think about this situation? This helps separate facts from opinions. For example, losing 2 trades in a row doesn't mean you're a failure. It means you need better trade selection or better risk control. This kind of questioning slowly weakens the grip of automatic negative thoughts. Then you shift from observation to change. You start replacing those